global credit markets in Europe, an accident in global credit markets in the US. What about what Jamie Dimon talked about as his black swan or his fear, which is all this money that's gone into ETFs, where there's an assumption of liquidity. What happens if we decide we don't want to have our money in ETFs and they have to sell?
Yeah, I hear
program selling.
Kunja, you're staying with us. So we are counting down to the market action. A quick look at the signals. They're positive before the start. About 30% on both DAX and FTSE futures.
Trading is a lot like life. Trading has drama.
When Harlequins take on Leicester Tigers, it's always a big game. But this year, it's the big game. Hosted at Twickenham, you can expect fireworks on the field and off it. Pre-kick-off, enjoy music, entertainment and a truly incredible atmosphere. Then watch two Gallagher Premiership rugby giants go head-to-head. Tickets from just £17 children, £27 adults. Go to tickets.quins.co.uk or search Big Game 12. Kick-off 4:30pm, Saturday 28th of December, Twickenham Stadium.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores exclusion I.
On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10pm on Friday the 22nd of November to 5am on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
We've got the start of the European trading session behind me, and the handover from Wall Street yesterday, very lackluster. Fresh records again on the major averages, green arrows, but not much movement percentage-wise. So investors just taking stock of some of the language now around trade, with reports yesterday that Beijing has become more pessimistic about achieving a deal. So what we've got, quite a different start to this session. You may recall on Friday as we wrapped up shop, very strong numbers on Wall Street. Bit of a lackluster day here as a result in the market action. Yesterday, lackluster day on Wall Street, and then today we've got a bounce on markets. So go figure where we're seeing some of the positivity coming through on markets this morning. What is actually behind some of that? We've got 0.2% on the stock Europe 600 today. Let's get into what we're seeing by individual parts of this market and the sectors as they open up for trade today. Food and drink, healthcare, some of the weak parts of the market. A couple of red arrows in these areas that you're seeing at the start. But from there, fairly broad-based sweep into the green through to utilities, telcos, real estate, all moving higher. Some of the better parts of this market around the cyclicals, autos trading up 0.4%, 0.4% after a fairly strong read-in on European car sales this morning. The likes of Peugeot, Ferrari, some of the better performers. Basic resources, industrials, you can put that in a trade-related basket as well, as investors continue to eye any progress. Industrials trading up 0.5%. Banking stocks. SEB, funnily enough, after we've been mentioning some of the reports that are across this morning from this bank, actually one of the better performers that we are seeing, 2.5% in the green. The overall sector trades higher as well. Let's get into what we're seeing by the individual indices. Currently 7326 on the boards, about 0.25% firmer. Also strong signals for the DAX this morning, parking some of the red ink yesterday when it fell by a similar amount. The red ink that we saw were actually even deeper on the Italian market, trading up 0.5% in the session yesterday, recovering some of that at the start today. About 0.25% higher. So modestly north seems to be the trade that we're watching in the early minutes of the session. Let's get to those car sales in Europe, as we did see some positive signals. They reached their highest level in a decade as new registrations rose more than 8% to 1.18 million in October. A resurgent Volkswagen was the driving force behind the figures, with the German group posting a 31% gain. That stock price this morning, as you can see, moving ahead by 0.6%. One of the better performers. When it comes to rivals, Renault, that stock this morning you can see up 0.4%. Renault and Toyota also recorded significant growth. Strong demand in the key markets of Germany and France overall helped offset a contraction in the UK market. Comparisons are also helped as last year's numbers were negatively impacted by new emissions testing rules. To Swiss banking, Julius Baer on our radar this morning, and we're not seeing a share price trade. First up, as we wait for some signals, it has warned it will miss its net new money targets for this year due to outflows from an Italian subsidiary. The Swiss lender said it would take an impairment charge of around 90 million euros relating to Kairos, which has previously underperformed. Now, the bank also cited temporary headwinds, but assets under management rose 10% in the first 10 months of the year. Let's take a look at EasyJet and how it is starting out the trading day. It is down by 1%. It reported a more than 3% decline in full-year pre-tax profit as the airline blamed a weaker consumer confidence for a dip in revenue per seat. The company has gone on, though, to say that forward bookings for the first half of 2020 are reassuring, coming in just ahead of last year's figure. But the budget carrier says it plans to become the world's first operator of net zero carbon flights. It will spend an estimated £25 million in the next financial year to offset emissions from fuel used on flights. And the signalling very interesting there, as there have been concerns right across the sector that you may see some problems in the airline space, particularly if some of the younger customers, millennials, change their leisure flights because of those concerns around the environment. So an initiative now taken by the budget carrier to try and tackle some of those problems. Meantime, EasyJet is the latest airline to place a new Airbus order. Emirates has also requested 50 long-haul A350 jetliners in a deal worth $16 billion, while Air Arabia has put in a $14 billion order for several A320s. Let's take a close look at SEB. The trade this morning firmer, 1.75% the stock price, 3-month performance slightly weaker. It has responded to allegations of money laundering by Sweden's public broadcaster SVT. The bank says it has received a list of 194 corporate names included in an upcoming Swedish broadcast on money laundering in the Baltics. The bank has explained that the names that are listed are covered by its own internal analysis, saying its, quote, fundamental assessment of possible money laundering activities has not changed. However, it has also gone on to say that 95% of customer relations on that list have been terminated. Steve.
Yeah, we'll keep an eye on this one. I'm doing a little bit of work on it. Investor have got just over 20% of that. That's the Wallenberg family as well. But I guess, is there some relief that it's not worse than people had expected, that it tallies with what their internal assessment is, that they're painting a picture of historical rather than current issues? But again, we'll keep an eye on this one because it's a very fast-moving story over at SEB. Right, Dan Kemp joins us, Chief Investment Officer, EMEA, Morningstar Investment Management. Good morning to you.
Good morning.
We've been speaking with our guest host, who is still with us, Goon Chow, about the performance of markets, the unloved rally that was 2019 so far. We could still have a precipitous decline in the last 6 or 7 trading weeks of the year. But you've been making a similar point about how extraordinary performance and the year-to-date returns have exceeded most prior year returns in local currency terms in a whole host of assets, from US equity up 20%, US Treasuries 15%, US corporate bonds up 13%, global government bonds up 12% as well. Can that... Well, first of all, do you want to explain what you think happened in 2019?
Yes, and we should always remember that when you're looking backwards, then it's very difficult not to fall victim to hindsight bias.
We do that every single day.
And create stories around it. But what we seem to have seen over 2019 is really a focus on certainty. That conditions for investors in terms of the economic background and low interest rates have been very positive, but we've seen money flow into more certain stocks, more certain assets, and away from uncertain assets.
Okay, I will straight away provoke you and prod you a little bit and say, I disagree. I think they bought everything.
Yep.
And with tech, my notes. Tech, 40% higher this year in the US as well. Certainty in tech?
Yes.
Certainty in some tech? Yes. Other tech? Microsoft, I get it. Google, I think I get it. Alphabet. Amazon, I even get AWS and stuff like that. But some of these names, they're far from certain.
Well, that's right. So some of the smaller names, you're right, they're far from certain. But there's been a desire for high-quality businesses, and quality is often synonymous in investors' minds with a high and sustainable earnings growth. And so we see these global tech companies where people, in our view, have a far too positive view of the long-term earnings growth and margins and the valuation.
Certainty, then?
I think it's misplaced certainty in general.
Which means, unlike this chap over here who thinks we're going to have a blockbuster start to 2020, I can't believe 2020. The next, actually, you think, will there be a reckoning, or is it just going to carry on?
Well, I think in some assets, we certainly seem to be borrowing returns from the future, which will need to be paid back at some point. And we see that in overvaluation in things like US tech. I think we see it in overvaluation in UK government bonds and some other areas as well. But in other parts of the market where there is less certainty, where there's a lot of uncertainty, there's real opportunities because investors hate economically sensitive stocks, trade sensitive stocks.
Sure, jump in.
I was going to say that there is a bit of differentiation. I mean, you look at some of the IPOs which we've had, the big blockbuster IPOs, they're not doing well, right? Lyft, Beyond Meat. Sure, they had the initial lift up, but then they've come lift up, but now they've come back down. So there is differentiation for sure.
But how does that manifest itself for investors? And when I was at a recent tech event, to me it seemed as though the IPO companies, the unicorns that were chasing growth, now have to make rational choices and not do everything because the game is up. Investors want to see the profits; they don't just want to see the growth story. Very different when you talk about the big tech companies in the States that have huge cash reserves; they can keep on growing. But for me, the problem is when regulators now start taking a look over these businesses and they say, whoa, what have we created here? Will this be allowed to continue? There are risks in these businesses. And whether that means deeper research and development costs, means slower growth because they're now huge companies. You need to buy growth or organic growth to try and keep up. So
in the US.
So these are the links we start to think about. And how do investors start to price that in? Because if I think back to Facebook, investors did not price in the regulatory risk at the time around Facebook.
Well, that's what I find so fascinating, the idea that these valuations were so high, that investors were so optimistic about the long-term prospects. And as you say, there just seems to be over the last few months a realization that maybe some of those expectations were too optimistic, and actually those incredible price premiums, valuation premiums, aren't necessarily justified in all cases. There's obviously differentiation, absolutely, but not in all cases.
Sorry, Dan, are you doing what you wanted to try and avoid in creating the story, having looked at it? Because I am deeply suspicious of many investors who buy something which is hot, and they say they're buying it because they think there's something amazing happening in the medium to longer term. I think a lot of people buy something that's hot, whether it's gold, whether it's tech, whether it's, I don't know, maybe the banking sector will have its day again, because it's going up. And it's the good old-fashioned momentum trade. And I think too many people try to create a wonderful narrative of why they're buying this stuff, and actually they're just buying because it's going up.
Well, that may well be the case.
And in your long experience in the financial markets, isn't that the case? People just buy on, well, we say buy on blue, but buy on green, sell on red.
Well, unfortunately, there's a load of that goes on naturally, and that's the danger of trying to predict what's going to happen next. We're long-term valuation-driven investors, and so as we look at markets, when we see the dispersion in valuations, which has increased over the year, we ask ourselves, well, is there a rationale for that? Yes, there's a real danger, as I said at the beginning, about creating a story, and the story then shouldn't affect your analysis going forward. But it seems to us that there has been a desire for certainty and a shunning of uncertainty, because we're seeing that in valuations.
Can I ask you about a shakedown in the markets, though, because you are quite optimistic. And one view is that you've seen a lot of investors go into tech, and whenever there's a liquidity event, you see selling in areas of the market where investors can quickly realise some of the cash they may need to fund a margin call or something else. So is that a risk? If there is a market event, if there is a sell-off, that you will see selling in technology?
I don't think it's on the equity side. I really think it's, when you look at bubbles which burst, it's usually you have to have a combination of leverage, you've been funded to put this position on, and you've got to have a valuations problem. And I'm not an equity expert, but it doesn't seem that there is this leverage in equities. You haven't had all of us borrowing to put money into our equity exposure. No, it's just our cash stuck in equity. But
elsewhere you have, and maybe Dan, you want to comment on that. Elsewhere, people have been leveraging up a little bit. There's still that element of the market, and if they need to realise some of the losses elsewhere, do they sell technology? Do they quickly just make the decision, I've done well in some of these names, 40-odd% this year, I'm going to sell that, and I'm going to use it for the rest of the portfolio?
Well, they might well do if they're seeing those high valuations, those gains, as you say, that may be a source of funds. I think, again, it's more likely to be that people lose confidence in the story behind these stocks in many cases. And on the leverage front, I think if we look at the corporate debt market in the US, obviously we have seen lower quality debt being issued to fund buybacks and things like that. So you're absolutely right. There's the leverage may be hidden. It may be somewhere else from where we've seen it before.
I think it's more in my universe, the fixed income universe, the corporate side. You look at the debt loads of corporates where they are in many countries, in the US, in Korea, in China, of course. We're back up to the levels of, we're above the pre-financial crisis levels. That's where the leverage is, and that's probably where the dangers are.
I'm just looking for your higher conviction calls for 2020. I'm struggling to find them, Dan. I'm struggling to find anything above low to medium, but I have managed to just about eke out a medium to higher conviction in a couple of areas. South Korea's one, but I want to get the DAX up. Here we go. Look, they put it on the screen. Beautifully done by our production team. 25% higher so far this year as well. It's had a decent run up as well, but you like Germany for 2020. Why?
We do like Germany for 2020. It seems to us, again, from a valuation perspective, that investors dislike stocks that are leveraged to the global economy. And of course, that really sums up the German economy, German companies. And so when we look at the valuation of those companies, they look pretty low to us. And again, that seems to be a function of concerns about trade wars and the fact that Germany is so key to that global supply chain, and also challenges with autos, as we see.
Is it trading, though, and I'm hastily trying to get up a comparison chart, so just give me a second. Is it trading at a significant enough discount to some of those conviction areas you mentioned earlier on? For instance, on a trailing PE, it trades on 18 times. That is a discount to the S&P of around about 4 percentage points as well. Is that enough of a discount to get excited about that story? We obviously think it is.
Yeah, I think, again, it's not so much the trailing PE, that's clearly one metric that everyone would look at.
Comparison I could find,
But we would see earnings as being depressed as well because of what's been happening in global trade. And so, again, as we take a forward-looking view, we see good companies in that market leveraged to global trade, which are being penalised rather because of concerns about what's going on there and concerns about that overall slowdown in the global economy. And so we'd see the US as offering very high valuations on very high earnings and margins, whereas with Germany we're seeing lower earnings and margins.
And on talking about valuation,
We're going to break. I'm in trouble now.
UK equities.
Yes.
May I ask you what you think about those?
Absolutely, but that's probably a longer answer than we have. So I'll get out the crystal ball while we're on break.
Okay.
Yeah. Just to say, on your call, Germany led the ACA data today. I mean, it's one data point. It could be not a swallow creating a summer situation, but it's 12.7% rise in German auto sales and Volkswagen 29% gain. So it kind of underlines a little bit of your hope as well. Dan Kemp, we've got to say goodbye. Thank you very much indeed for joining us. Chief Investment Officer.
Sorry, that was my fault.
It's all right, I'm just desperately reversing. I'm not very good at reverse. Can you reverse in space? I bet you can do it much better than me.
I can reverse.
Dan Kemp, Chief Investment Officer, EMEA, Morningstar Investment Management. I've finished reversing. You can go forward now.
It really was my fault. Coming up on the show, BME shares.
Assist for this show.
Sabotaged you. Coming up on the show, BME shares skyrocketed as the Spanish bourse found itself at the centre of a bidding war. We'll discuss the latest merger activity among the exchanges.
And much more coming from CNBC's East Tech West in Nansha, China stage. Another panel. Is that Deirdre sitting down? It is, isn't it? We'll find out what she's up to after the break.
The CNBC app has new features.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
We've been watching some deal activity in the exchanges space, and BME certainly flying higher in trade yesterday after a couple of approaches actually, and you can see the stock up another 0.5% today. Euronext, which has said it is interested in the business, soaring or actually moving south by 0.4%. So a bit of a mixed picture in the two names as a BME closed Monday's session almost 40% higher after Six Group and Euronext made competing approaches for the Madrid Stock Exchange. Steve Grove joins us, founder at Vision 57. Steve, over the years we've spoken about a number of mergers in the space. Why is the time ripe for another exchange deal?
Well, I think what you've got to bear in mind is that at the end of the day, these businesses are all about scale. And despite their sort of glamorous ancestry, it's about collapsing as many markets as you can onto one technology platform, one distribution network, and then monetizing the data. And they're really not glamorous at all at that level. And so the idea is that you just want to add as many venues as you can onto each platform. And we're seeing a continuation of that now with Euronext and Six looking at BME.
Who's in the driver's seat here? We've got a couple of potential bidders, and Six tabling its offer and Euronext having talks. But who do you think is in the driving seat here? Well,
I think it's very interesting because if you look at Euronext, they have a very clear strategy. You've got to remember they were spun out when I bought Nise Life, Euronext, back in 2013. And they've had to rebuild their reputation, which they've done incredibly well, as a destination for SME tech firms across Europe. They bought the Irish Stock Exchange in February. They outbid NASDAQ for Oslo Bourse in May. So you can see BME as a nice way to complete their set of European destinations. So at that level, you would argue that Euronext has a much clearer sort of strategic basis for BME. And I suspect that the Six interest is perhaps a little bit more opportunistic.
Let's go back in history. You and I remember very well IX. Not many people remember IX. That's going back to July 2000. Don Cruikshank, Werner Siefer, one of my first early press conferences as a journalist, checking this one out, you know. Fact of the matter is, there's been a lot of merger consolidation for this entire century so far as well. Is BME worth it? Is this just the dregs at the end?
No, I don't think it's the dregs at the end because it does have a distinct local market and there's a number of big firms that are listed there. And
I bet every one of those listed firms is listed elsewhere as well, if they're big.
Not some of them are, yes, that's true. But I think the point is it's actually relatively cheap if you take a very aggressive approach to the cost. Just to take the names and put them on a new matching engine, and suddenly you've got a whole bunch more liquidity that not only can you monetize by matching, but also crucially by selling the data, which is where the real value is.
For us to talk about trading and equities, and this is the whole business now. And as we've seen with Refinitiv and London Stock Exchange, it's data now, isn't it? We've moved on from the original reason for the merger consolidation, apart from land grabs, was about facing up to the multilateral trading facilities, wasn't it? Well, that's what we heard throughout the first 10 years of it in this century. Now it's all about data, isn't it?
Absolutely, and not just in terms of selling data at a very high price, but also looking at how you can mine that data to derive new insights in terms of what's trading, but also the creation of indices. I mean, that's something that the LSE did incredibly well with Russell. There's huge value in a world that trades passively in owning an index.
What investment does that require? Because you get the sense that exchanges need to be bigger and bigger to have the cash to reinvest in the research and development to create this sort of digitized platform for the future. Is that the rationale here, that you've got a bigger player, can consolidate an asset, it's got deep pockets, and it can bring the technology? So the more it bundles up, the more strength it has.
So Euronext has been rebuilding its core technology onto a new platform called Optique. And so the more things that you can trade through that engine, the more efficient it is and the more it helps you scale the business.
Are you seeing any trends in terms of bringing fixed income into the platforms? I mean, that dark area of fixed income?
Only in as much as fixed income ETFs, which are certainly growing in the US. But typically, the fixed income cash markets, if you exclude US treasuries or gilts, are so illiquid, they don't lend themselves to be traded in the same way.
It's a bit chicken and the egg. They're illiquid because they're traded OTC.
Well, yes, they are. But then you've got to bear in mind that there's so many more instruments. So any company you take has one stock, but it might have 1,000 different bonds. that all have different expiries and tenures and everything else. So that's one of the reasons why there's so little liquidity in the bond market.
Do you want to talk about price tags? About 30+% premium was offered, and this is almost like the first stage of a deal. You've got one waiting in the wings. As a starting point, it's not bad. How much further could this one run?
Well, as you noted in the share price, they're expecting it to more offers to come in at a higher price. I think clearly Euronext would see this strategically as a very valuable next step for them. I think what's interesting, though, is that SIX is one of the very last mutual organisations, so it's still owned by the brokers and banks that use it. So they're not suspect to external shareholders. And bizarrely, I think SIX have probably got deeper pockets, but maybe want it less.
It's the same for us, doesn't it? Steve, thank you very much. Steve Grove with us, founder at Vision 57. A quick look at some of the market action across the board as the Stocks Europe 600 hits its highest level in over 4 years. 47.38 on the boards, up about 1/3%. So green bouncing onto most of the European markets in the early part of this session. We'll be right back after this.
Right now on CNBC Make It, when it comes to video games,
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The world is a noisy place, but whether I'm here or here, my phone calls are always loud and clear on my Doro 6620. Hi, love. Yes, I can hear you perfectly. I'm 10 minutes away. Get your Doro 6620 from Amazon, Tesco, and O2 today.
It's nearly here. At Amazon this Christmas, our Black Friday sale has new deals every day. So there'll be more, and more.
Oh, I love it.
The Amazon Black Friday sale, delivering all you need for less. From the 22nd to the 29th of November.
Everybody needs somebody to love. Someone to love.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Europe Stock 600 returns to highs not seen since July 2015, following fresh records on Wall Street. The PIMCO Vice Chairman John Stadzinski tells CNBC in China that a Phase 1 trade deal could be signed before Christmas.
Trump sees this as important. He's gotten a lot of endorsement from American CEOs who want to see some type of stabilization.
A siege at a Hong Kong university campus enters its third day as anti-government protesters remain in a standoff with police, whilst the city's leader, Carrie Lam, urges a peaceful solution.
They have to stop violence, give up their weapons, and come up peacefully and take the instructions from the police.
Germany and France driving EU car registrations to a decade high for October as Volkswagen puts pedal to the metal with a 30% jump in sales. And EasyJet shares up 3.5% as the British airline posts full-year results at the upper end of its guidance, whilst announcing a strategy to offset carbon emissions from all flights.
Here in Europe have been trading for half an hour so far, despite a fairly weak handover from Wall Street, only slight bounces and not much appetite for stocks in that US session. We are bouncing fairly modestly here in the trading session, much better than what we saw yesterday, where markets were pretty much reversing across many of those core indices. The benchmark still trading firmly with a lot of green across by individual sectors. Only a couple of patches of red ink at the start of the trading day. So let's just see how that's shaping up now as we move throughout the session. The mood music, very similar. Media stocks, food and beverage, telecoms at the bottom of the charts, but gains. A lot of the cyclicals, autos having a decent session, 0.75% higher on the back of some upbeat news from car registrations here in Europe. Volkswagen very much helping out that story with a fairly significant rebound. Basic resources also stronger, and travel and leisure trades higher by 1%. I think one of the more interesting stories in this space has been from EasyJet today as it looks to try and offset its carbon emissions, given all the pushback that's been taking place by environmental protesters and the concerns that have been raised by air travel to see an initiative from an airline to move in that direction. Now, let's take a look at what we're seeing by those individual stocks. And at the top end of this chart, a lot of UK names you can see are dominating the list here. Halma, 8.7% higher. HomeServe on the back of some numbers, 5.5% in the green. And Cobham trades higher by 3.8%. At the bottom end, one of the French retailers, Casino, trades down by almost 1%. Weak showing for that stock today. Tullow Oil in the space, the energy space, down 1.25%, and SES at the bottom of the charts. Steve.
Thank you very much indeed for that. Several anti-government protesters are still barricaded inside a Hong Kong university, which has been under siege for 3 straight days. The Chinese territory's leader, Carrie Lam, has called on the demonstrators to come out peacefully as police arrests reach 400. Martin is actually on the ground near the Polytechnic University, where a few dozen protesters have been leaving the site. But interestingly as well, Martin, there have been calls from those inside of the university in the building to get the wider public to come out and give them support. I'm very interested to see whether these hardcore protesters are getting that support from more moderate Hong Kong residents.
No sign of that yet, Steve, that we've observed at least, but that's probably not going to stop some members of the public from trying to help these kids inside. And they are kids, very young students here. So I want to update you on movements and also developments that have happened within the last hour or so. We have observed and seen ourselves rough head count, about 50 of these students being led out of the campus. And I can get my camera to just zoom in. It's that walkway which is inclining and sloping right to left, just behind me here, just underneath it. That's where they were led away to waiting ambulances. So rough head count, about 50 of them in aluminum space blankets, also wrapped in normal blue blankets here. And also want to update you on a press conference that the Hong Kong police has been holding this afternoon. They're saying that as of 3 p.m. today, if the camera can come back to me and we can continue talking about this, police in Hong Kong have arrested and took information from about 1,100 students at the Poly University, or Hong Kong Poly as it's known, and also the nearby area. So 1,100 of them arrested. Among them, 400 were adults, 200 were minors. So again, we have to correct some of the reporting we were doing earlier on. 400 plus 200 equals the 600, which I was mentioning earlier. These are people who voluntarily left the Hong Kong Poly campus. Now, at this stage, police say that they believe the majority of the people who left Hong Kong Poly behind me voluntarily are not I repeat, not students of this university, one of 7 or 8 in Hong Kong, famous for design, also famous for engineering, teaching engineering here. As well, we've got the police telling us that they've done a rough count of the weapons that these students have, or rather have amassed. And they're saying that close to 4,000 petrol bombs, those classic Molotov cocktails, which have been flung about for close to 6 months now in Hong Kong, were found in the Chinese University of Hong Kong. That was where most of the action was focused in the week past, although that has now moved on, obviously, in the last 3-4 days to Hong Kong Poly there. So police also believe that when the final count is done, when they manage to go in to Hong Kong Poly, they're likely to find even more than the 4,000 Molotov cocktails found amassed at the Chinese University of Hong Kong. So the situation here, we simply don't know whether the police tactics of siege are working. The idea had been basically to drain their resolve, their will, their supplies, their food, their water, their ammunition to the point where they would literally give up, or whether this is reaction to what Carrie Lam said this morning, which is offering the students, look, if you guys surrender and leave the campus peacefully at Hong Kong Poly, we will not arrest you as long as you are underage, that is students. We're still not clear where that age line is drawn. So could it be a reaction to that, taking advantage of that hand of generosity? We simply don't know. But the sense is the situation is not just calm, but not so much the siege, but the digging in of heels by the students over the last 3 days, that is withering as well. Back to you.
Thank you very much for bringing us the latest detail around that Hong Kong story. In other news, the mood in Beijing around a trade deal is, quote, pessimistic. That's according to a government source who told CNBC China is troubled by President Trump's reluctance to roll back tariffs. The US has granted Huawei a fresh 90-day extension, though, allowing US firms to continue doing business with the blacklisted Chinese company. US Commerce Secretary Wilbur Ross said the decision was made to prevent customers in rural areas from being left in the dark. However, Ross warned Huawei it would continue to be, quote, rigorously monitored to prevent any threat to national security. PIMCO Vice Chairman John Staditsky spoke about Huawei's importance to China at CNBC's East Tech West.
Huawei is unique. Huawei is 30 years old. They've had time to go through their own strategy. They've developed their own culture. They have their own generations of staff and graduates, and they have clear footprint. And they also have now, and they're benefiting from, I think they're 37% of the mobile phone market here in China. So Huawei is an example of what, remember, Apple's 30 plus years old, and some of the other big companies. So, but China does not have a lot of Huaweis, and the United States has many Huaweis. So it's going to take another 5 or 10 or 15 years to replicate what Huawei has done.
Meanwhile, the future of travel has been another key theme at East Tech West. Airbnb China President Peng Tao has told CNBC at the event that the company is particularly targeting millennial customers.
Airbnb is use technology to reimagine travel, and our mission is actually that anyone can be anywhere. But China has 1.4 billion people and such a big country, so we have to enter China. Otherwise, we cannot achieve our mission. So we come to China, I think we see the business is really driven by the strong network effect. So travel is low frequency. So with coming to China, we can see the network effect is strengthened. More importantly, we see the millennials, 8 out of 10 according to a survey, like the way travel like a local. And for our platform, 7 out of 10 are millennials. So actually a good match. So that's why we're in China.
Well, let's cross back out to Jeff at East Tech West Summit in Nansha. Jeff, the story around Airbnb tells us the unicorns are still very keen to go after business in China after all the problems with valuations and all the issues with growth over profits. But just give us a sense of what's taking place in the ground there, particularly around this travel segment. As we know, many Chinese, mainland Chinese particularly, want to start traveling more.
This is a fascinating story, Karen, as you know, because there is already a very large Chinese outbound travel market. But when you look at the numbers relative to the population size and relative to the pace of the growth of the middle class who could then become that next traveller, there are still tremendous opportunities. And as we heard from one of our earlier guests, there's not only that issue of outbound Chinese tourism, but the issue of within China tourism and Chinese consumers choosing to take short-term vacations in other Chinese cities or destinations. But I've got with me a guest who can maybe tell us a little bit more about some of the trends that are useful to the business community that are involved in setting up these holidays. With me is Ming Fung. He comes to us from a company called Travelport, which used to be on the NYSE, but was taken private by private equity earlier this year in a $4.4 billion buyout. Ming Fung is responsible for Asia. He's managing director of that business. Good to have you with us here.
Thank you. Thanks
so
for
the question really coming out of the studio was about Asian travel trends. Your business is not about selling to the consumer. You kind of sell the IT plumbing to various operators who then supply that end service to the consumer.
I couldn't have put it more accurate myself.
So tell me, obviously, what they buy from you then depends on how much volume they're seeing in their own operations. What are you seeing in terms of the growth of your sales in Asia as against Europe and North America right now?
So certainly Asia is an area of like tremendous growth for us. And then I think everyone in the industry see that. It's not just in terms of where the volume is. We don't just focus on that. We also very much focus on the consumer trends because that really drives a lot of what's happening in the industry. So we did a survey earlier this year, 23,000 people, global survey looking at digital travelers, and people, the future of travel in the way that we see it is that it's going to be far more personalized, far more customizable, but also very, very connected and completely driven by technology. So technology plays a huge role in supporting this trend. The trend is consumer driven, and Asia has a different way of different development in terms of consumer trends. Asian consumers are far more technically savvy, adopt technology in a very different manner and use them in a very different manner. So that, then is all connected where it then drives the different needs. It then drives the different ways that suppliers and operators need to provide that service to the industry.
So we've got two issues here. One is the overall growth of the business. And from what you're saying, it sounds like 2019 will be solid, 2020 probably going to be solid as well.
I think with these kind of growth rate, I think everyone is, the pessimist amongst us would say that, Asia is slowing down, but, versus anywhere else in the world, that volume of growth cannot be ignored. So, whether it's actually slowing down, whether it's actually stalled, like what John was saying this morning, I think we are at the point where we are actually ready to take off again. So the travel industry is going through a fair amount of changes. Some due to factors that is not controlled by the industry, others that are industry changes and evolving. So, for example, the IATA NDC coming through, that is going to be impacting the travelers, operators in terms of resource, in terms of cost, in terms of focus. But all these things is only going to help us have a much better platform to propel and grow in 2020. So I think for us is that 2019, great year, first half. Second year, some influence from factors maybe we can't control. But 2020, I think we're looking very, very good. So I'm very optimistic and very happy about it.
So let's talk about the other aspect of this, which is what you described as the technology and the ability of consumers to adapt very rapidly in Asia to evolution in that technology. We spent a lot of time here talking about blockchain, talking about facial recognition technology, AI, deep data mining for trends to improve the product and so on and so forth. Pick out one or two areas where you see these new technologies technologies being implemented in the kind of systems that you're selling to the travel companies or to the airlines or to the hotel booking
Absolutely.
companies?
So as a conduit in the industry, as someone who actually connects the supplier to the operators to the retailers, we do a lot of processing. AI is huge for us. So we have a data science unit that actually really look at how AI can be utilized in the way that our system runs to help improve definitely from a cost standpoint, but also provide much better solution and also results that we send to our agency customers, that we provide to our airline customers. So, AI is a huge one. Blockchain is a big one also. We look at the way that we process payment in the travel industry. All of the benefit that blockchain can bring can really help in that payment space from a security standpoint, from a fraud protection standpoint. There's many, many different usage. It's difficult to, for a better word, look at a crystal ball and not have it explode in your face.
Yeah.
We talk about 5G, we talk about 6G, all these things. I don't think that we are at a point where we can pinpoint saying we're going to use this for that. I think in Asia there's a lot of consumer-driven trends that we have not yet really seen or be able to nut down to then say, well, this is applicable for that or that's applicable for this. So there's still going to be a lot of innovation. I still see a lot of different companies and businesses coming out with very, very good ideas of utilizing all these different technologies.
But I do wonder, obviously the technology is exciting, but it comes with additional costs to the agents or to those who are buying it from you. Are budgets in a good enough shape as we go into 2020 for customers actually to be upgrading their IT systems at this point? Because we've seen CapEx spending around the world has been relatively low, and you actually need that to increase to generate higher profits for you.
The good thing about being in a region that is growing, there is return in terms of the stuff that you're investing. So yes, there's a big CapEx investment required. There's probably a long-term CapEx investment required, but you're seeing the return. You're seeing the potential of the market very, very clearly, as opposed to maybe other regions or other kind of industry. It is not as obvious. I think for travel, we are seeing good returns. We are seeing fairly kind of short-term impact in terms of what you're investing. Invest in a platform enables you to save a lot of costs, reach more people, transact a lot more, do more business. All these things comes together a lot faster in Asia, I think.
Yeah. And just one very brief question before we go. You worked in this business when it was a publicly listed company. You now work in it as a private business.
Yes.
What difference has it made to the way you work in the company? Better, worse, easier, more challenging?
A bit of everything, I would say. I think we have only recently been taken private. The good thing is that there's a sense of optimism in the focus, in the things we want to do. And there's a very, very clear sense of the investment going into the business to build it for the future.
Right.
So I think that is a great part of it. I think certainly there will be some changes, as with any business going through anything. But for us, I think the optimism, the positiveness of the new owners and the investment they were making into the business is great.
Yep. It's been a pleasure catching up.
Thank you very much.
Thanks very much for giving us your time. And just to point out, Sirius and Evergreen, the companies that waded in with that $4.4 billion bid. Guys, I'll send it back to you from our event here in China.
Amazing coverage. Thank you so much for that, Jeff. Well, stay tuned for our continuing coverage from the event from East Tech West with some of the biggest players in the tech industry speaking to CNBC. Don't miss our one-on-one with IBM's Greater China president coming up on Street Science.
Get ready whenever you want. Subscribe to the American...
Freezing Tuesday mornings like this are cruel. You cough, you splutter, so does your car. Its battery dead, killed by an icy claw. Will anyone stand up to winter? Yes, you, come to Halfords. We fit new batteries on the spot from just £15. And we're open late 7 days a week. See halfords.com for opening hours. Here in Wandsworth. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores exclusion I.
Very good and cordial. Pathetic. Very good and cordial. Pathetic. This is the President, over a very short period of time, describing the Federal Reserve.
Which one do you think it is then?
Well, it depends what mood he's in, doesn't it?
Right.
Let me just do the read quickly and we'll get to our guest. That's how President Trump, the very good and cordial bit, is how President Trump described his White House meeting with Federal Reserve Chair Jerome Powell. They discussed negative rates, policy easing, inflation. Steve Mnuchin was there as well. The meeting comes after months of criticism of the central bank's monetary policy decisions. On October 1st, for instance, as I said, Mr. Trump called the Fed, quote, pathetic, saying the central bank is its own worst enemy after the weakest US manufacturing read in 10 years. I'm not quite sure the point of the meeting yesterday. Apparently, Mr. Powell turned around and said, yeah, we're not political. We just get on with looking at the data, and these are our mantras, trying to get economic growth and stable markets and control inflation. And Mr. Trump was very pleased with it as well. What's the point of a meeting like that when you know pretty well that at some stage Mr. Trump will again criticise the Federal Reserve if they don't do what he sees as the right call?
I think it's from Powell's side. It's one of those meetings you have to do. Every central banker faces this kind of pressure. I was just thinking about it earlier that apparently Johnson and Nixon did the same to their central bankers. They pulled them aside, they harangued them.
What's Johnson? Boris Johnson or Andrew Johnson?
Lyndon Johnson.
Lyndon B. Johnson, okay, right. And Mr. Nixon did the same as well.
They did exactly the same. They harangued their central bankers.
Slightly higher inflation in the early 70s, Mr. Nixon had.
And they had more difficult economic situations, Vietnam War. So central bankers are cut from a different cloth. I think they're designed.
We've gotten used to a little bit of independence in policy making at the central bank, haven't we? So some of us still feel a little bit uncomfortable that there's been so much interaction from the Oval Office.
Do you believe in central bank independence, Karen?
Well, I try to. I believe it's quite necessary. Otherwise, you're financing government initiatives, aren't you?
You say that. We've only had it in the United Kingdom since the onset of the new Labour government in 1997, when one of the first acts as Chancellor of Exchequer was Gordon Brown made it independent. Was central bank action before 97 so different from it has been over the ensuing 22 years?
Do you strengthen institutions because everyone recognises it's a good thing to have? Do we just want to destroy it?
It's a great thing to have, but it's not a long tradition. That's the problem. If you look at most countries, we've only had it for 20 years. I mean, I'm talking developed countries. We've only had it for 20 years.
Diversity in the boardroom too is a new thing, but it should happen.
No, absolutely. It's completely good. It must happen.
So when the cracks occurred, because the triumvirate of authorities from the SFA and the Treasury and the Bank of England couldn't spot the great financial crisis as well, would it have been better if they were actually coordinated and worked closer together?
I think the problem, though, if you're looking at growth in an economy and then you look at giveaways, look at trade policy, I mean, all of this, you're effectively looking for the central bank to offset or to try and help you out with your policy. And that's not what we're looking for. That what Trump should wage a trade war for years and years and years, and the central bank should then cut to try and shore up the economy. Is that what we all want?
No, it isn't. I mean, I think the point we should have is you have strong institutions, but the people in the institutions should be capable. Two separate subjects.
Yeah, absolutely. And if mind you, what happens when we get a politician who becomes one of the most powerful central bankers in Europe? Not saying that's happening. Oh, yeah, it is, isn't it? Madame Lagarde.
The speech on Friday, are you?
We'll leave it there. Nice to see you. I probably won't see you before Christmas. Have a good Christmas. Please start saying that to people.
Merry Christmas. It's our first
one. We can't do that, can we? Kuchai, macro and FX strategist, Union Bancaire Privée. Thank you very much indeed. That's it for today. I'm told there's an amazing show coming up next. It's only an hour long, though, so it's called Street Signs. Go get your cup of coffee and come back.
There's one show that every CEO...
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
It's never nice missing out. But millions are doing just that by having a current account that doesn't pay them any interest on their hard-earned money. TSB is here to help. They offer interest to all their Plus account customers for no monthly fee. So if you're one of the millions of people who are missing out, talk to TSB. Terms and conditions apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion. Was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Going, gone.
Some things just don't hang around. Like a great deal in Tesco Mobile's best ever Black Friday event. Right now you can get the Samsung Galaxy S10 for just $29.99 a month. But this deal ends Sunday 1st of December. Catch it before it's gone. Tesco Mobile's best ever Black Friday event. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion. Was £35.99, now £29.99. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger.
Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome to Street Signs. I'm Joanna Versace.
And I'm Willem Marks, and these are your headlines this Tuesday morning in London.
Europe's stock 600 returns to highs not seen since July 2015, following fresh records on Wall Street, with trade-sensitive sectors leading the gains.
CNBC learns Beijing is pessimistic about the signing of a Phase 1 trade deal, but the vice chairman of PIMCO tells us he's more upbeat that the deal will get done before the end of the year.
The view would be to try to resolve something no later than, of course, we have American Thanksgiving coming up in the last Thursday of November, but to try to resolve something by the beginning of December and sign it before Christmas.
And dozens of anti-government protesters leave a leading Hong Kong university after a siege that's lasted the last 3 days, as the city's leader, Carrie Lam, urges the remaining demonstrators to leave peacefully.
They have to stop violence, give up their weapons, and come up peacefully and take the instructions from the police.
And France and Germany drive EU car registrations to a decade high in the month of October, as Volkswagen puts its pedal to the metal with a 30% jump in sales.
Good morning and welcome to Street Science, everybody. Let's take you to some of the market price action we've had over the last 24 hours. So yet another record close for Wall Street, just about eking out gains across all of the three majors. Tech and consumer staples also seeing fresh record closes in yesterday's session, no doubt aided a little bit by the positive commentary for once out of President Trump with respect to his meeting with the Fed Chair Powell, saying they had a cordial meeting. But overnight, the mood soured a little bit, and CNBC learned that China, Beijing are turning a little bit pessimistic about the prospect of these trade talks. That dampened the mood overnight, and we saw the Japanese index trade in negative territory, even though we did see another positive session for the Shanghai. So the handover from Asia was pretty mixed, but you can see that the heat map in Europe is actually mostly trading in the green, pointing to a positive start for the day for Stocks Europe 600, with a nice bounce actually up about 0.4 of a percentage point at levels not seen since July 2015. So at levels, actual index levels not seen for the last 4 years or so. So nice jump in European equities. Let's talk about the individual bourses, though. Starting with the UK index, the FTSE 100 up about 0.6 of a percentage point today, leading the gains nicely. Right up at the top, we've got miners, Antofagasta, Glencore, some of the stocks that are doing very well. Also, Helma reported very strong earnings today, right at the top of the FTSE 100. Also, bear in mind, not shown here, FTSE 250, the mid-cap index, also continues to perform very, very strongly. A Brexit trade, a Brexit optimism trade. The FTSE 250 is now at a 14-month high in the UK. Xetra also having a positive start, up about 75 points or 0.6 of a percentage point. Some of the names we're looking at here are the auto space. We'll get to that in a second, as well as some of the banks. Deutsche Bank, Commerzbank also up about 1% today in trading. In France, CAC 40 up about 0.3 of a percentage point as well. And then FTSE MIB in Italy also having a good session so far, up 0.6 of a percentage point. But let's talk about sectors. I mentioned autos just now. So we have autos right at the top today in Europe, up 1.6%. Strong gains, mostly led by Volkswagen, because we had European car registrations come in extremely strong this year. And I'll give you a bit more detail on that shortly. Travel and leisure also up 1.2% today. Some strong numbers, good outlook from EasyJet, even though the numbers were not that strong for 2019. That's one of the stocks that is driving gains in that particular sector. EasyJet up about 3.5%, boosting travel and leisure. And obviously Airbus with the Dubai Air Show and all those orders coming in has been quite positive. Financial services also in focus. Remember, yesterday and today we've been talking about the Euronext and SIX potential takeover of BME in Spain. So it continues to be an area of focus. And of course, basic resources, bank cyclicals continue their recent mode of outperformance. And on the downside, we've got some of the defensives, media down about 0.2 percentage points, and then food and beverages also down 0.2. And actually, since the beginning of September, these defensive sectors are relatively down about 10% compared to cyclicals. So it has been a very good run for cyclicals the last couple of months or so. But as I mentioned, our top story today when it comes to markets is that of car sales in Europe, because they have hit their highest monthly level in a decade. Statistics from a European industry group show that during the month of October, new passenger car registrations rose more than 8% to 1.18 million vehicles. Volkswagen was the driving force behind the increase. The German group posted a 31% improvement. And Renault and Toyota also recorded significant growth. In terms of the geography, there was strong demand from buyers in Germany and France, but in the UK, registration figures fell almost 7%. So this is the suite of autos for you to get a broader image of how things are doing. Volkswagen, as you mentioned, leading the charge, up 2% now. Porsche up almost 2%. BMW, all the German automakers leading the bounce nicely. PSA, Peugeot, Renault also up about 1% as well. So solid start to the day for trading, particularly for the auto space. Willem.
Well, Joanna, that's here in Europe. Let's switch back to Hong Kong. In the last hour, CNBC's witnessed several anti-government protests exit the university that's been the centre of a police siege there over the past 3 days. The Chinese Territories leader, Carrie Lam, has demanded that demonstrators leave peacefully, and the city's police have announced some updated arrest figures. Our colleague Martin Sung joins us with the latest details. Martin, this siege at the Polytechnic, how many arrests are we talking about now?
So this is from a police press conference, Willem and Jumana. Good morning. In Europe, good morning as well, which was held earlier this afternoon. The numbers are quite specific, and it's a little hard to do the attrition math, I guess would be a good way to describe it. As of 3 p.m. today, the police are saying that they have arrested and taken information, the details of 1,100 people at Poly Hong Kong University, or Hong Kong Poly, just behind me here, and the surrounding areas, 1,100 of them. Among them, 400 were adults, suggesting the rest were, not adults and below that age. 200 were minors, so you've got 600 total people who voluntarily have left this university, which has been under siege now for coming to 3 days. At this stage, police say they believe the majority of people who left Hong Kong Poly voluntarily were not students from the actual university. And in terms of how many are left, well, the police are saying that they cannot disclose a specific number because operations are ongoing, suggesting there may be still people left inside. I need to update you, though. We were talking about this, and you referred to it seconds ago, Willem. Within the last hour or so, we witnessed, rough head count, about 50, several dozen at least, students being led out from the campus, off of campus, and into waiting ambulances, wrapped in aluminum space blankets, wrapped in normal blue blankets as well. And where they made their exit, if the camera can follow me, is just behind me here, that ramp or walkway sloping right to left. Just below it is where they left the scene, and further off to the left were the waiting ambulances. And if we can continue panning, we're starting to lose light here, so I just wanted to show you the expanse of Hong Kong Poly. It is one of 7 to 8 universities in Hong Kong, famous for its design and also its engineering faculties. All red brick, and if we can pause where we see the characters written, scrawled on the front of the building by the student protesters, the translation says 5 demands, not 1 less. And this is something they've been referring to for, 6 months now, since the protests first erupted. And if the camera can come back to me, we can continue talking about this. The demand that's, I think, caused the most controversy has been they're asking for an independent inquiry commission into excessive violence used by both sides, but particularly focused on the police, because there have been claims and allegations from the protesters and the public as well that perhaps the police were a little bit too heavy-handed when they were going in and dealing with the protesters. They called them rioters, in fact. The police addressed this issue during the Q&A session earlier at the press conference, reporters asked about two specific cases, one where a riot police officer was seen by others stomping on the head of a protester. Another question referred to police driving one of their vans at extremely high speed and dangerously so, it looked like. Both questions were answered perfunctorily, if not just simply cut off. And at the end of the reply, the police spokesperson said, look, the public and the media as well, you need to trust the police. By asking these testy questions, it just doesn't help the situation, and I'm paraphrasing here. So the messaging and the spin on this isn't terribly positive, and the skepticism remains that the Hong Kong police force may have been a little bit too heavy-handed dealing with this crisis, which has been dragging on now for 6 months. But for now, the siege of Hong Kong Poly seems to be withering, although there may still be some kids left inside. Back to you.
And Martin, given that, since there may still be people left there, and given the extraordinary video footage we've just seen over the last few days, does this matter? Is this potentially a turning point in these protests, the level of violence, the level of preparedness we saw from some of these protesters?
That is a good question, whether it's a tipping point or not, because what has changed, of course, has been the government approach. Since day one, basically, they put the onus and responsibility for calming down the situation, ratcheting it down on the protesters. They said, look, if we are to de-escalate, it's the protesters who need to do that. If we are to lessen the violence, the protesters need to do that as well. Not sufficiently addressing these allegations and claims of heavy-handedness by the police. Carrie Lam, though, earlier today, with that softly approach, offering the students, look, if you surrender now and leave peacefully, we will not arrest you. That was, I think, significant and quite in stark contrast to the recent rhetoric from Beijing. No response so far from China to what Carrie Lam said earlier this morning. But you will remember a few days ago, Chinese President Xi Jinping suggested that the crackdown on Hong Kong by the government, by security forces, needs to be stronger. That was underlined by an editorial in the China Daily newspaper, which said the approach so far by the Hong Kong government has been soft. Maybe they need to take a harder approach. So, tipping point, I don't know. Open question, but for now, at least, this chapter, the last 3 days, appears to be drawing to a close. We hope it is. Back to you.
Martin, thank you for bringing us the latest there. Martin Sung, live outside Hong Kong Polytechnic University there. Sticking with that part of the world, the mood in Beijing around a trade deal is, quote, pessimistic. That's according to a government source who's told CNBC China is troubled by President Trump's reluctance to roll back tariffs. Our colleagues Jeff Cutmore and Christine Tan join us now from CNBC's East Tech West conference in the Chinese city of Nansha. And presumably this is something that a lot of the business leaders there, guys, are very much focused on.
Yeah, absolutely, Willem. This clearly is the backdrop to this whole event. We're primarily talking about technology, but of course the risk is, without any significant progress around this trade story, then some of the issues like technology transfer and IP theft will not see any progress, and that will make life difficult for a lot of the people attending this event.
A 90-day extension is what the U.S. is giving Huawei, but that's on the side deal. But in terms of China-U.S. trade, that clearly is an issue. And what, to me, is most jarring is that this trade war has been dragging on for close to 2 years right now. Jeff, been covering it. So a lot of businesses are delaying their decision making. Orders are not being fulfilled. They're postponing their plans to expand. They're shifting things out. Supply chains are getting moved as well. So adjustments are being made. So everything is being delayed as a result of what's happening with the U.S. trade. We'll wait and see to see what's going to happen before they decide on whether to expand further into China.
Yeah, one of the pithier comments I heard from one of the delegates here is the only certainty we have at the moment for business planning is uncertainty. So we're having to make spending decisions for 2020 right now in the midst of this ongoing dispute. And interesting, when we thought that we had constructive progress over the weekend, that CNBC has learned that there is pessimism within the government in China about the fact that Donald Trump is reluctant to take away some of these tariffs that have been introduced. Not everybody is pessimistic, though. We caught up with the vice chairman of PIMCO, John Stadzinski, who is here at our event, and we asked him whether he thought it's still possible that we will see a deal before the end of the year. Let's have a listen to what he said.
There's an ongoing discussion. It's a very rigorous, robust discussion that's taking place as we speak. There are obviously issues remaining about agricultural purchase targets, forced technology, and broader enforcement issues. But I think the view would be to try to resolve something no later than, of course, we have American Thanksgiving coming up in the last Thursday of November, but to try to resolve something by the beginning of December and sign it before Christmas. And I think Trump sees this as important. He's gotten a lot of endorsement from American CEOs who want to see some type of stabilization and anchor in this broader relationship and trade dialogue between China and America.
So, Jeff, you sounded rather a little bit optimistic there compared to some of the other people we've been talking to, some of the other CEOs that I've been talking to as well. So clearly there are two sides of this U.S.-China trade deal, how businesses are looking at it and trying to move forward as U.S.-China struggles along.
Well, the messaging that we're getting here, obviously from the business community, is let's just get this sorted out and let's move forward, because there are concerns, obviously, that this is going to tamp down earnings expectations for 2020 if we see a reluctance to increase capital spending, because one company's capex is another company's profit, as we know, and nowhere is that more true than when you've got international companies that are utilizing businesses in China as part of their supply chain fulfillment. And if there are consequences, as we've seen with the Huawei story, if there are consequences of being locked out of supplying into China or out of China, then that is going to force companies to take more costly decisions about rerouting their supply.
I think a lot of companies have already made those decisions. They have shifted production, supply chains outside of China, just in case, preparing for the worst case scenario. A lot of that has gone into Southeast Asia. A lot of that has gone into Vietnam. Those decisions have been made. As for further expansion into China, there's a lot of wait and see to see what's going on with U.S.-China trade and what's going to be the next big step.
If I had to be a cynic, Willem, sending it back to you, it wouldn't surprise me if this is just a little bit like President Trump's own tweets, that China's just tweaking the tail a little bit with this expression of pessimism. They clearly want to see some progress around the tariff issue, but this hot and then cold and hot and then cold story is also having an impact on capital markets in the United States and elsewhere, and that's something that we do know President Trump pays quite a lot of attention to. Back to you.
Jeff, I think we can all forgive you the cynicism on the topic. Thanks to both of you guys for bringing us those comments from the PIMCO Vice Chairman and for that analysis as well.
Well, as Christine just mentioned a few moments ago, the U.S. Commerce Department has once more extended a temporary license that allows American companies to do business with Huawei. Commerce Secretary Wilbur Ross said the latest 90-day extension was to ensure that customers in rural America would not suddenly lose mobile phone coverage. But Ross warns Huawei that Washington would continue to, quote, rigorously monitor the firm to protect U.S. national security. And also coming up on the show, find out what happened when President Trump and the Fed Chair Jerome Powell met after weeks of critical exchanges over rate policy. We'll be right back.
Do you have concerns about mild memory loss related to aging?
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Something explosive is coming to the home of rugby. When Harlequins meet Leicester Tigers, expect fireworks. With tickets from £17 children and £27 adults, Big Game 12 is more than a Gallagher Premiership rugby fixture. It's London's biggest rugby party. Enjoy music, entertainment and a truly incredible atmosphere before the big game kicks off at 4:30pm, Saturday 28th of December at Twickenham Stadium. Go to tickets.quins.co.uk or search Big Game 12.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe it. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10pm on Friday the 22nd of November to 5am on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The world is a noisy place, but whether I'm here or here, my phone calls are always loud and clear on my Doro 6620. Hi, love. Yes, I can hear you perfectly. I'm 10 minutes away. Get your Doro 6620 from Amazon, Tesco, and O2 today.
Very good and cordial. That was the assessment of President Trump after a White House meeting with Federal Reserve Chair Jerome Powell. He has previously called Powell a bonehead and a terrible communicator. Trump said the two men discussed negative interest rates, policy easing, and inflation alongside the Treasury Secretary, Steven Mnuchin. But the Fed insisted Powell did not discuss his expectations for monetary policy. Trump has for months criticized the central bank's monetary policy decisions, and in October, the president described the Fed as, quote, pathetic, and said the central bank was its own worst enemy after the release of the weakest U.S. manufacturing data in over 10 years. As Stephen Blitz, the U.S. economist from TS Lombard, joins us, let's talk about yesterday's meeting.
Sure.
Do you see that as an opportunity for reconciliation as far as President Trump is concerned, or an opportunity to perhaps pressure Mr. Powell into changing course?
Well, I think, first of all, it's quite normal for the chairman of the Fed to meet the president of the United States. So that in and of itself, it's not like, a U.S.-China sit-down. All right, this is part of a normal ongoing discussion, especially also between the chairman of the Fed and the secretary of the Treasury. Reconciliation, I wonder how much when Trump sits down and talks to somebody like Powell and these people, does he talk to them with a nod and a wink and says that these, these tweets and stuff, I'm just throwing red meat to my constituents, but how I really feel in a professional setting that we are in right now is this way. And that you have to accept the separation of the two, and because I don't think he sits there and calls him a bonehead in person.
Perhaps, well, we wouldn't know. I mean, to be a fly on the wall in that meeting. But to take it back to the Fed, I mean, the Fed seemed to be implying that they're happy with what they've done for now. They've cut interest rate twice, seem to be taking a pause. Do you think that this is it for now? This is the end of this mid-cycle adjustment?
Well, it is and it isn't. Okay, so in terms of the actual cutting of the funds rate, they've made their 3 cuts. They've gotten down. I think they recognize that 150 to 1 3/4 is as low as they want the funds rate to be without triggering financial excesses, right? Which is sort of the third bound of policy after employment and inflation. But they're also adding a tremendous amount of capital to their balance sheet, and that's ongoing through June. So we have to understand that they're still easing in the sense that they're still adding liquidity. And to give a sense of proportion, if they do the $60 billion a month for 8 months, if they end up doing that, that's $480 billion, which is about 75% of the budget deficit of net new treasury financing in that period of time. Yeah. And that disintermediates the foreign sector from buying treasuries, which opens up, again, the return of foreign capital to go into the corporate sector in the U.S., which is where it was, and that eases spreads there and all that. Well, tightens spreads, it eases pressures on and liquidity strains. So that's ongoing through June. So the idea that they've done the 3 and now they're out of it is not quite correct.
So the Fed had a statement out yesterday around that meeting talking about their continued objective analysis of the data. I'm being quite organized this year. I've actually already started planning my holiday shopping. And I just wonder, as you think about retail consumers on your side of the Atlantic getting ready to spend money that might be burning a hole in their pocket right now, I mean, how important is the U.S. consumer when it comes to the data the Fed's looking at right now?
Well, right now it's extraordinary. You know, like everything else, things kind of move and focus, right? Because, but we know that, you know, the old saw is that 70% of the, you know, of GDP is a consumer. But when you drive that down to the variable part of it, as opposed to money spent on rent and medical services and things like that, you get down to around 30%. So it's very important right now because that's the read on which the Fed outlook rests. And the consumer is very much dependent upon the equity market. The one interesting aspect of this whole recovery is that you've had this increase in net worth relative to their personal income. And it's the first time that you've had that kind of increase without an increase in household borrowing. So what's happened is the household balance sheet now holds much more in capital assets, capital market assets, than they do in real estate. And so when the equity market goes down, or if it does go down, then that clearly triggers, as we saw last December, it clearly triggers a sharp drop in consumption. So, to the point about the balance sheet and putting liquidity into the system, this is all an operation to keep the equity market afloat. And historically, the Fed's been able to do that.
So that's household wealth. What about household income, though? Because despite these really, really ever-improving, essentially, employment figures, we're not seeing wages increase as much as we have in the past historically. Not as much as historically, though. So I'm just wondering, with that income question, is inflation at some point going to get closer to target? When's it going to happen?
Well, it's not going to happen next year because wage and price inflation tends to lag the economy about a year, right? So the wage and price numbers you're seeing this year are really a reflection, certainly the wage numbers are a reflection of the economy in 2018. So 2019, we know that earnings are a lot lower this year, or lower this year than they were last year, and so wage growth is going to be lower next year. Part of the problem with wages generally through this cycle, and you're right, it did kind of peak out this year, is that so much of the growth in employment in the U.S. has been in low-wage service sector jobs. So you've gotten a lot of employment, but you've gotten a lot of employment in jobs that are well below the median average hourly earnings, as opposed to manufacturing and construction, which is certainly construction's well above it. So when you add on top of that technology replacing labor and globalization, all these other factors, secular factors, you get this lid on earnings. On household earnings, and with the weakness in profits this year, we all know, right? You get paid this year on how your firm did last year. And so next year, firms have done not as well this year. So when the wage cycle comes through next year, wage growth is going to be lower. So if you're looking for stronger wage and price push, you're probably looking into 2021.
Stephen, we'll leave it there. Thank you so much for coming this morning.
Thank
Stephen
you.
Blitz, US economist at TS Lombard, joining us there now. We'll stay tuned for our continuing coverage from East Tech West, where some of the biggest players in the tech industry will be speaking to CNBC. And don't miss CNBC's one-on-one interview with IBM's Greater China president. That is coming up right after this break.
For drug-free sinus and allergy relief, experience Navage.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always little on price. Subject to availability, selected stores excludes NI.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Slam dunk! The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. James Harden and the Houston Rockets are in LA to take on Kawhi Leonard and the Clippers.
Harden pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place. This Friday, the Houston Rockets are at the LA Clippers. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Welcome back to Street Signs. I'm Villa Marks.
I'm Joanna Versace, and these are your headlines.
Europe's stock 600 hits its highest level since July 2015 after fresh records on Wall Street, with trade-sensitive sectors leading the gains.
CNBC learns Beijing is pessimistic about the prospect of a Phase 1 U.S.-China trade deal, but PIMCO's vice chairman says he's upbeat and agreement could come sooner rather than later.
The view would be to try to resolve something no later than, of course, we have American Thanksgiving coming up in the last Thursday of November, but to try to resolve something by the beginning of December and sign it before Christmas.
Dozens of anti-government protesters exit a Hong Kong university that's been under siege for the last 3 days. The city's chief executive, Carrie Lam, demands that remaining demonstrators leave peacefully.
They have to stop violence, give up their weapons, and come up peacefully and take the instructions from the police.
Germany and France drive EU car registrations to a decade high for October as Volkswagen puts pedal to the metal with a 30% jump in sales. While Europe's stock 600 has hit its highest level since July 2015 amid hopes the US and China will reach a deal in their ongoing trade war. Speaking at CNBC's East Tech West, PIMCO Vice Chair John Sadinsky said the two countries must work together to ensure global growth.
The world will be a much stronger and more stable place if they can find ways to align their interests rather than trying to compete. Because they are very complementary. Even on the tech side, America has 3 or 4 generations of Silicon Valley trained technologists. China has some great examples, crown jewels like Huawei, which we were talking to yesterday, but they have nowhere near any type of culture of Silicon Valley. They don't have the academic institutions around Silicon Valley that we have in Northern California. So, but they do have an incredibly impressive manufacturing expertise and acumen for very complicated components. And the two together, if they can find ways to align their interests, can be very powerful for the planet.
Well, let's get back out to Jeff, who joins us live from CNBC's East Tech West in Nansha, China. And Jeff, we were just hearing the interview that you did with the Vice Chair of PIMCO, and he's talking about the alignment of interests between the US and China, you've got to think that many other American companies must be similarly hoping for an alignment of interests here as well.
Yes, you know what, Jemana, I've got a terrific guest, and I have to tell you, for our European audience that are tuning in and watching, I've managed to find another European here at this Nansha event. Alain Benachot is with me. He runs the Greater China business for IBM. Great to have you with us. Thanks very much for joining us here. Look, let's start with the difficult ones first. Pessimism apparently is the message today coming out of Beijing on the likelihood of a trade agreement here. We don't actually know whether real progress is being made, but what is the IBM position on the likelihood of some deal getting signed here? What is your wish?
Oh, I don't want to speculate on anything. Everything I read, by the way, happens to be untrue. So, we get a deal when we get a deal, right?
Yeah.
But, our position, frankly, has never changed. We need to urge the two governments, to resolve the issues. And we, certainly want to have a deal. We want to resolve the situation. The tariffs are not a solution. They are counterproductive. We said that. They are tax on American business, tax on consumers, and frankly, an issue on global economy scale, right? So my opinion is that the reason will prevail. Now, IBM, we stand for International Business Machine, remember? Right? So international means that we are certainly a good advisor to both governments to resolve the situation. We want to do this global trade agreement, and we need that. The world needs it, actually.
Yeah. The other news, obviously, that we've had is that there's been a 90-day extension for American companies selling parts, components and chips to Huawei, which, again, for those who want to see progress in this area, perhaps could be perceived as a positive message.
It is a positive. For us in IBM, and we had a very small operation with Huawei, mostly consulting services and software support, so we're not really concerned. What we think is that we need to get back on, the real thinking that you need to take all these companies in China to become cognitive enterprises. That's the theme that we are selling right now, and we have all the capability. We have all the capability in China to really achieve this. We're the #1 services company in China.
That's interesting, but the challenge here, it seems to me, is knowing what's real and what isn't real sometimes. And maybe that's part of the narrative of the trade story with the United States. But recently, we know a TV company here did an examination of how many companies that claim to use blockchain actually use blockchain, and it turned out to be about 10%. So when we think about a technology like AI, what are the real rates of penetration actually in the Chinese market?
Good question. And actually, we did a survey with what we call the Institute of Business Value in IBM, and we found that 14% of the business are actively using AI, 14% only. By the way, it's above the average. The global average is 10%. So China is a little ahead, just the same pack of Japan and the US. But there is a long way to go. There are some barriers to adoption of AI, as you know, Jeff. Frankly, first of all, a skill issue. Second, what to do with AI. It's just the proof of concept, what I call the pilot purgatory, right? So you need to get out of the pilots and really roll out AI in a large scale. And the third thing, obviously, which is a real barrier, is what we call trusted AI. The people really need to have transparency and really in the data acquisition, how you train the system so they are absolutely fair and unbiased. So that's the thing that creates a little bit of barriers. Once we overcome these barriers, we can certainly extend and then take advantage of full AI in all the businesses.
When you talk about these barriers, we look at the manpower side of the story, and what China's throwing out, 40 million engineers or maths graduates. That is an astonishing number of engineers coming into this industry at this time. Does that solidify the Chinese opportunity to be the leader in areas like AI and blockchain?
Well, listen. I mean, I don't choose sides because, I get, asked this question very often. I say, where are the best talents? And I say, well, they are all in these places. By the way, as a French guy, I would say that we have a great deal of talents, and especially in the math and applied math, in France. We have in India, we have in the US, and we have in China. But, all I can tell you is that, we are certainly in IBM the best talent in the industry because we hire them, right? Our cognitive process transformation team, by the way, is the second to none in China. So one other thing that we say, we leverage all the talents in order to really to help our clients, but the methodologies and the technology that we're using is what makes the combination of the skills and the technology is make the companies that we are successful in AI.
Something maybe the audience won't know, but I can tell them you came to China from a global sales role at IBM, so you're just the man to talk about when it comes to CapEx intentions for next year. As you read them, it feels as though companies are struggling at this point to decide to increase CapEx into 2020. What's your sense of this?
Well, there's certainly a great deal of questions when it comes to global economy. We need to resolve these issues. I can see that the global index that we are following in IBM is still growing. Okay, so there is still not really great growth, but the industry is going to grow. And the problem is to capture this pocket of opportunity. You mentioned blockchain and AI. Blockchain is a great thing, and especially in China, I think we are the pioneers. I mean, we launched the first food safety platform, for Walmart in China, as you know. And now President Xi is touting blockchain in a very detailed way, by the way. I was very impressed. And that's going to be another wave of opportunity for us.
The risk, of course, is, particularly in this space, that companies suspend or reduce CapEx until they have more certainty. But here, I'm hearing some companies tell me that they're actually increasing R&D spend and engagement with tech partners where they're in ad tech businesses because they feel that once the bad news is out of the way, we will get some kind of springboard-like recovery. I don't know whether that is how you read things over at IBM or whether you have a different view about what this is going to look like. Will it be a hockey stick rebound once we've got some resolution, or will it look like something else?
I cannot predict the outcome. I think, Jeff, this is what we can say is that, our R&D budget has always been very stable. I mean, and especially good and bad times. That's the IBM company mantra. We need to maintain. And as you know, by the way, we're number one in patents in terms of AI. So that means that we are still very active, and we're very active, in this area. I do think that there is, a great deal of opportunity once the situation is resolved. And you're right, maybe a hockey stick. I cannot predict.
Alain, it's been a pleasure catching up with you. Thanks so much for coming to our position here. Alain Benachot, who joins us from IBM. I will send it back to you in London.
Jeff, thanks so much for bringing us that interview. Very interesting. Well, Tiger Chia, the Vice President of Chinese ride-hailing giant Didi Chuxing, has explained to our colleague Arjun Karpal at East Tech West what he sees as the key differences between the US and China.
If you look at China and the US, there are many very different markets in terms of ride-hailing. So in the US, for instance, nearly everyone owns a car. But in China, in contrast, one car has to be shared by 6 people. So there's a shortage of supply. So the supply and demand condition in China and the US are very different. Therefore, we have to develop much more sophisticated marketplace technologies to manage supply and demand, as well as match drivers with passengers than our American peers.
Chia also answered a question from Arjun about when his firm might try to go public.
I'm a tech person, so I don't have a timeline. As I mentioned, I think at this point that the penetration is only at 2%. We still need to continue to improve our safety capabilities and continue to create user value, and that is the focus for us at this point.
Let's talk a little bit about Didi's future when it comes to technology, because you recently spun off the driverless car unit as well. What are the long-term plans there? When do you think autonomous vehicles are going to have an impact on Didi and its users? When do you see them coming to the market?
That's a good question. As you know, our autonomous driving unit became an independent company this year. So we think the value of autonomous driving are in safety as well as in efficiency. What I mentioned about safety is it can entirely eliminate the human errors. So perhaps you don't know the number, like over 1.35 million people die on the road every year, and autonomous driving can help that. On the other hand, like today, we were only able to fulfill 65% of the user requests, and autonomous vehicles is an effective way to fill in the gap of supply and demand. So I think the autonomous vehicle is going to roll out in a staged fashion, perhaps first in some geo-fenced areas, and autonomous vehicles and human-driven vehicles are going to coexist.
And when do you expect to see the first autonomous vehicles on the Didi
platform?
platform?
We are going to launch a robotaxi service in Shanghai very soon.
Okay. This year?
This year, very soon, and the users can just hail a self-driving vehicle through the Didi app.
Well, that was more from East Tech West with Arjun, but also coming up on Street Signs, Russian tech giant Yandex strikes a governance deal with the Kremlin in a bid to allay foreign control fears. We'll get the details from the CFO, Greg Abovsky. That comes up in just a few moments.
Do you have concerns about mild memory loss related to aging?
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Ladies and gentlemen, behold the world's most fantastical, sensational number. 105 million. Tonight's Euro Millions jackpot is a massive £105 million.
Euro Millions, celebrating 25 years of the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase, policy applies. See tescomobile.com/terms.
Welcome back to Street Science. Well, let's check in on how European markets are faring. It is a positive start to the day for all of the majors. You can see that FTSE 100 is almost leading the charge, up 1%, about 70 points higher. Very good performance today out of miners. Many of those names up north of 1 to 1.5 percentage points in the UK. Xetra DAX also up 1.1%, as you can see, up almost 150 points. And there we're seeing good performance out of the banking names, Commerzbank, Deutsche Bank, some of the names that are in focus, as well as basic resources names and industrials having a good rebound session in early trades. CAC 40 in France up about 0.4 percentage points, and FTSE MIB in Italy up 0.75. As we've been talking about on the show, the car sales numbers have been very strong for Europe, so that's driving a big rebound in that particular sector. And of course, a lot of those names are based in Germany and France, so that is also one of the reasons why those indices are doing so well today. Volkswagen up about 2% in trading. As for U.S. futures, well, yesterday we reached yet again record closes for the three majors, eking out a little bit of those gains towards the end of the session. S&P, Dow, Nasdaq also pointing to another positive session today. Worth bearing in mind that later on we get U.S. housing starts, and we will get some earnings out of Home Depot and Kohl's, so you want to watch out for those later. And of course, the impeachment hearings continue to take place as far as politics are concerned.
Meanwhile, Swedish bank SEB has responded to an impending investigative report from the country's public broadcaster SVT about money laundering at the bank's Baltic subsidiaries. The bank says it's received a list of 194 corporate names that will be included in an upcoming television broadcast, and SEB today insisted it had already examined many of the clients on that list and had already ended its relationship with 95% of them. It also stated its, quote, fundamental assessment of possible money laundering activities inside the bank remains unchanged.
And Julius Baer has warned it will miss its net new money targets for 2019 because of outflows from an Italian subsidiary. The Swiss lender said it would take an impairment charge of around 90 million euros linked to Milan-based asset manager Keros. The subsidiary underperformed last year and has seen further outflows and high-level executive departures this year. The bank also said it anticipated, quote, temporary headwinds, but reported that assets under management had jumped 10% in the first 10 months of the year.
And shares in EasyJet, well, they're higher today after the low-cost airline reported full-year profit at the upper end of its guidance. However, it also saw a dip in revenue per seat, which the company blamed on weaker consumer confidence. EasyJet insisted that forward bookings for the first half of 2020 were reassuring, and the budget carrier also announced plans to become the world's first major airline to offset carbon emissions for all its flights. It said it will spend an estimated £25 million each year to make that possible.
Well, very strong performance out of EasyJet today, up 4%. And speaking of EasyJet, they are also the latest airline to place a new Airbus order. Emirates has also requested 50 long-haul A350 jetliners in a deal worth $16 billion, while Air Arabia has put in a $14 billion order for several A320s. Airbus up 1%, of course, and this comes on the heels of Dubai Air Show.
Another company that's seen its shares rise is the Russian tech firm Yandex. It closed almost 12% higher after it agreed a restructuring deal. The company will create a public interest foundation. We're joined now by the CFO, Greg Abovsky, very kindly getting up early for us in New York. Greg, thanks so much for doing that. I want to ask you, how does this restructuring potentially work, and what's the need for it?
Yes, good morning. Thanks so much for having me on the show. Look, I think to get a sense of kind of how big Yandex is and its impact on society as a whole, you kind of have to imagine U.S. firms like Google, Amazon, Spotify, and Uber sort of all rolled into one. We're the leader in search, we're the leader in ride-sharing, and so on. And so the impact that we have on consumers and society is much, much greater than one would have. And over the last years and months, it became clear that there's more and more concerns about things like data sovereignty, around things like protection of IP. I think the same issues that sort of impact a lot of folks around the world. And we came out with a restructuring announcement, which we put out to our shareholders yesterday, and the vote should take place in about a month, and we hope that shareholders will be very supportive of that. And I think the share price reaction is reflective of relief that there's been a solution that really balances the interests of all the different sides.
you mentioned there concerns about some of these issues, and more specifically, there's been some legislation drafted by someone in Moscow looking at ways to force this upon tech firms, including yours. My understanding is that legislator has now said they might withdraw or even amend that legislation. And if that's the case, why would you pursue this kind of restructuring?
Well, obviously, the legislation that you're referring to is still in very early form, in draft form. And I think our goal was to be proactive and try to come up with a solution that really does kind of balance the interests of all the different sides, the interests of the shareholders, the interests of the company, and the interests of the sovereign, if you will, of the Russian government. So we think this addresses all of those concerns, and I think the very strong price reaction yesterday is kind of evidence of that.
Sir, but just to bring it back to addressing all those concerns, you mentioned the sovereign, you mentioned the shareholders. What about consumers? I mean, what is this impact? What is the likely impact going to be on the people who actually use your services? What is it doing to enhance consumer data protection?
So the way that this Public Interest Foundation works is it creates a subcommittee of the board of directors, which has oversight over any changes to our data policies and has oversight of potential sales of data, public user data to foreign entities. And so in that case, I would say that their protections are actually enhanced by the creation of this Public Interest Foundation.
And just a very quick question. How would you describe your relationship is right now with Sberbank? Obviously, they're one of the largest shareholders in your company, but after this move, they will have less powers and certainly don't have the veto power anymore.
So let me just clarify it really quickly. Sberbank is not a very large shareholder. In fact, I'm not even sure if they are a shareholder per se. Sberbank has historically held a priority share in the company, which blocked the accumulation of more than 25% of the shares in the company by another party. More importantly, the chairman of Sberbank sits on our board, plus we have multiple successful joint ventures together with Sberbank, such as Yandex Market or Yandex Money. And post this restructuring, that should not change in any way.
All right, thank you very much for your time, sir. Greg Abovsky, the CFO of Yandex.
Make sure you tune into our coverage of Russia calling over the next few days when we'll hear from some of the country's other top companies, including VTB and the boss of Russia's sovereign wealth fund, Kirill Dmitriev.
And that's it for our show today. I'm Joanna Versace.
I'm Bella Marks, Global Exchange. Up next.
I'm a regular in my neighborhood. I'm a regular at my local coffee shop and my local barber shop.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
At Amazon this Christmas, you'll find loads of gifting ideas for everyone. You can get the Dell XPS touchscreen laptop, Philips Lumia Prestige IPL, and the Fitbit Versa 2 smartwatch. All with low prices and free UK delivery on eligible orders over £20. So there'll be more, and more.
Oh, how did you guess?
Amazon, delivering all you need this Christmas for less.
Everybody needs somebody. At TUI, we can help you find the perfect family holiday. And with flights from 20 UK airports, we make getting there a whole lot easier. Book now and choose from thousands of holidays under $399 per person and spread the cost with £0 deposit when paying with direct debit. Book online or in store with one of our travel experts. At TUI, we cross the T's, dot the I's and put you in the middle. Offer available on selected holidays for a limited time and subject to availability. Booking T's and C's apply. At or protected.
Looking for a great phone to take brilliant photos? Like an incredible iPhone 7 with a dual-lens camera? Then look no further than Tesco Mobile's best ever Black Friday event. You'll find an iPhone 7 for just $14.49 a month, our lowest ever price. Be quick, this deal ends Sunday, 1st of December. Tesco Mobile, every little helps.
Best ever Black Friday based on range of products in promotion. Was £19.75, now £14.49. Offer ends 1st of December. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase, policy applies. See tescomobile.com/terms.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Along the goal line, Martin scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
13, the Dow trying for its 13th record close of the year. Investors clearly shrugging off concerns around trade, but one former Trump executive says the president's credibility is on the line. Unrest continues in Hong Kong, a standoff between protesters and police. Now in its third day, a university there is surrounded. A big boost for Boeing. It scores billions of dollars in new orders for its grounded 737 MAX jet. And maybe this is why markets keep going up day after day. Goldman Sachs' list of the world's most owned stocks. And let's just say, being original, not really a thing on Wall Street right now. The data as Worldwide Exchange begins right now. Good afternoon or good evening and welcome from wherever in the world that you may be watching. I am Brian Sullivan. Thanks for joining us. Here's a shot of Capitol Hill. We show this because today we'll kick off another busy day of public testimony in the impeachment inquiry. Expect detailed accounts from 9 officials over the next 3 days. We'll give you more on what's expected coming up. But first, let's get down to the markets and your money. And here's how things are looking. And it's certainly looking better than the rainy, kind of nasty cold weather that we've got here in the New York area today. The Dow coming off its record 12th higher close of the year. The S&P 500 coming off its 23rd, and it looks like we could be lucky 13. Dow futures, they are up right now. And speaking of the number 23, did you know that the average gain of a stock in the S&P 500 this year is indeed 23%? That's right. And 63 stocks in the S&P 500 have gained more than 50% this year. Those are some big numbers. All right, in the bond market, no real change. Benchmark 10-year yield stuck right around 1.82%, but around the world, a lot of green on the screen. And with the early trade in Europe, we are seeing higher markets there as well. All the major averages in Europe, they are up. And this is kind of interesting. I did not know this literally until looking at data this morning. The CAC 40 and the DAX in Germany, basically their Dows, they're each up more than 10% in just 3 months. The German DAX is up 13% in 90 days. All the major global markets, particularly in Europe, are doing well, and that carries over into Asia as well. The markets in Hong Kong rising despite the situation with pro-democracy demonstrators getting more dire by the day, and that is where we begin right now. Because as many as 500 protesters are believed to be trapped inside of a university in Hong Kong, police continue to lay siege to the campus. This on top of another major development in the ban on wearing masks in Hong Kong. CNBC's Martin Sung joining us now from Hong Kong live with more. Martin, good to see you.
Good morning, Brian. Yeah, after 3 days of violent clashes between police here and students, the siege of what is known here as Hong Kong Polytechnic, just behind me, one of the city's leading universities, appears to be withering. Earlier today, we witnessed several dozen students wrapped in space blankets being led away to waiting ambulances. Now, whether or not this is police siege tactics starting to work, that is trying to starve the students of access to water, of food, access to medical care, or whether it's the students themselves picking up and receiving the olive branch extended by Hong Kong's embattled leader Carrie Lam earlier today. She's saying that if you surrender peacefully and leave, we will not address you. We simply don't know yet. What we do know is the softer approach taken by Lam by extending that olive branch is in very stark contrast to recent rhetoric from Beijing. Just days ago, Chinese President Xi Jinping warning that Hong Kong may need a harder crackdown. That underlined by an editorial in the People's Daily, which is the Chinese Communist Party's mouthpiece newspaper, saying that Hong Kong's approach so far has been soft. What may be needed now is a tougher approach. So the siege may be withering, but the broader crisis, which is now coming into its 6th month of just who is in charge in Hong Kong, may still not be over. Brian, back to you.
Yeah, and then, Martin, there's another facet as well about this ban on Hong Kong masks. Basically, facial recognition technology widely used there. You've also got, of course, the occasional use of tear gas. A lot of these kids are wearing masks. There has been a ban on wearing masks there, and now Beijing is chiming in on that.
Exactly. Yes, the High Court in Hong Kong ruled that these masks be banned simply because the protesters were wearing them to protect their identities and protect themselves from being tracked and identified by police. But earlier today, Xinhua News Agency, the official news agency in China, saying that officials there have decided that courts in Hong Kong are not empowered to rule on the constitutionality of that ban. So we go all the way back, we circle back to the question of who's actually in charge in Hong Kong, because the basic law, which is the mini constitution, which governs relations between China and Hong Kong, suggests, and there's a lot of gray area here, that China is in charge of foreign affairs as well as defense for Hong Kong, but everything else is sort of up in the air. So again, we come full circle. Who is actually in charge here in Hong Kong? Back to you.
Well, that is a good question. It has been for a long time. Martin Sung, thank you very much. Martin, be safe. Well, China's Alibaba, Boeing, and Airbnb also all have news today. First off, Boeing. Sales of the grounded 737 MAX jet actually accelerating. The company netting some $6 billion worth of new orders for the MAX at the Dubai Air Show. Kazakhstan's Air Astana, which is a customer usually of rival Airbus, said it will buy 30 MAX jets, a commitment valued at about $3.5 billion. Boeing also reportedly signing a separate deal for more than 20 MAXs to an undisclosed customer. Also today, the Wall Street Journal is reporting that Alibaba will stop collecting orders early for its $13 billion secondary listing. This due to strong investor demand, saying that the share sale is already well oversubscribed. And also happening today, Airbnb sealing a $500 million Olympics partnership that covers both the winter and summer games through the year 2028. All this as Airbnb prepares for its public market debut. And by the way, company co-founder and CEO Brian Chesky was on with Jim on Mad Money last night.
When we provided the housing for the Olympics in Rio, 85,000 people stayed in an Airbnb home. These are people that may not have gone to the Olympics. We have a breakthrough partnership with the Olympics from now through 2028. That's 5 Olympic Games, where we're going to be the official housing provider for the Olympics. So you can now stay with a local when you're going to the Olympics.
All right, so now let's get back to the markets and your investments, because futures are higher once again. The NASDAQ, by the way, happens to be up 28% so far this year. And of course, a big part of that move has been what else? Big tech. In fact, a key takeaway from Goldman Sachs' latest survey of hedge funds found that more than 800 hedge funds covering some $2 trillion in equity positions said the funds remain committed to big tech. The survey's top 5 stocks, you guessed it, Microsoft, Amazon, Facebook, Alibaba, and Google. Now, they have been at the top of Goldman's VIP basket of hedge fund holdings now for 3.5 years. In fact, just 3 stocks, Amazon, Facebook, and Google, collectively are 5% of all hedge fund U.S. stock holdings on the long side. Joining us now is Potomac Wealth Advisors founder and president Mark Avalon. All right, Mark, so I'm not going to ask you to comment on the Goldman report, other than when I see that every single hedge fund is buying the same 3, 4, 5 stocks, which also, by the way, are the same 3, 4, 5 stocks that are the top 30 or 40% of most of the ETFs that our audience uses. I wonder what happens if and when those stocks begin to get sold.
Well, there is a lot of momentum going into the same names, and we've seen that for quite some time. This is not just a brand new phenomenon. Look, some of that is justified. We've had a lot of good news. Microsoft winning a big cloud contract. We have great news out of Apple. There's really momentum now, even in Facebook, despite their privacy issues. And we've been positive on tech and continue to be. Just because money flows there doesn't mean it's a net negative. I think we're seeing the underlying and residual effects of that huge tax bill trickling through the economy. It's going into the strength of the consumer, driving demand, and the Fed has taken itself out of the game. This is a confluence of events that's driving stocks to the favorable position.
Is there any, though, concern at all, Mark, just from a macro perspective, that this overcrowding, and by the way, that's a word Goldman Sachs used in their report, not my editorializing, that this overcrowding perhaps in these few names, if and when they start to get sold, if they're dragging the market up, it would make sense that if people finally realize or think these stocks may be overvalued or they've made their money, how can the market stay up if those names begin to get sold? Now, maybe they never will, but what if they do?
Well, they will. Volatility is inevitable, and it's going to be sharp, and it's going to swing fast. We've seen that more and more with the increase in program trading. I think investors are a little complacent now and a little more optimistic than they otherwise should be. Valuations matter. We're above the historical forward PE average. When we look at that, historically, the next 5 years have muted or even negative returns. And I think right now we're only looking at the positive side of the good news, and the good news is out there. My concern is that investors who otherwise wouldn't be in risky assets, who wouldn't be in stocks, are looking at the gains in those large cap tech names, the market favorites, and saying, I want to get in here, I want to make money. And then when the market has these sharp, inevitable pullbacks, there's a knee-jerk reaction. That would be one of my market concerns right now.
And how likely do you think that is, Mark?
Well, I think that if the Fed stays on the sidelines and we have stability out of Washington and we get a trade deal, that's a good environment for stocks. The problem, and there's a lot of uncertainty in that, it's not really looking good for policy out of Washington. The 2 governor races switching to the Democrat side really don't bode well for the president, the impeachment hearings. And we've heard what some of your market commentators say, how far stocks could drop if there's a change in administration. That's a huge overhang. It's going to be a huge overhang in 2020, at least for stock prices. And I'm not sure the trade deal is going to be robust at all. If we get anything, it's more of a trade truce. So I think investors are closing the eyes to big macro risks. And then you also have some company-specific issues that could surface. So I think investors should continue to invest, but not think Wall Street's a one-way street.
All right, well said and good advice there, Mark. Mark Avalon, we appreciate it. You have a great day, Mark. Thank you.
Good to be here.
All right, we've got a developing story this morning. Potential troubles mounting for WeWork and its former CEO. Frank Collins joining us now with more on this. Frank.
Hey, good morning, Brian. New York's Attorney General is investigating WeWork, according to reports by Reuters. The company confirming it's been contacted by the AG's office, and it says it's now cooperating. Sources say this probe is partly focused on WeWork's founder and former CEO, Adam Neumann, and whether he engaged in so-called self-dealing. Neumann bought properties and then leased them back to WeWork, and he borrowed against his own stake in the company. Reuters says that Neumann also planned to charge WeWork nearly $6 million to use the word we in its rebranding, which he had trademarked. Neumann agreed to return the cash from that trademark use when he resigned in September, just a week before WeWork canceled plans to launch its IPO. This latest news comes as WeWork is facing a major restructuring. Reports say the company plans to cut 4,000 jobs, or nearly a third of its workforce, starting this week, to focus more on its core business. And this is not the first time that WeWork has come under scrutiny from the New York AG's office. Last year, it rolled back a policy of requiring employees to sign non-compete agreements as part of a settlement. Brian, back over to you.
Frank Collins, Frank, thank you, and we'll see you in a bit. Thank you. When we come back, all right, we are live from a major technology conference in Guangzhou, China, where you've got to have an invitation to get in, but somehow Deirdre Bosa scored an invite. So she's going to join us, talk everything from 5G to AI with the top names in the biz. Speaking of 5G, the FCC dealing a major blow to one company operating in the space. That stock absolutely walloped yesterday. Down again this morning. The name and exactly what happened coming up. And why former Trump aide Gary Cohn says the president's credibility is on the line. when it comes to the trade deal. A very busy hour still ahead as WEX rolls on right after this.
Dana-Farber Cancer Institute.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked breads to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
All right, welcome back. Well, despite its rather unwieldy name, especially at 5:15 in the morning, the East Tech West Conference, is a big deal. It's an invitation-only tech retreat held in Guangzhou, China. Now in its second year, the event is bringing together a guest list of the world's most influential tech leaders in artificial intelligence, 5G, and much more. So where else would we find our own Deirdre Borsa, who is live at the East Tech West Conference? He said. Deirdre.
Brian, I didn't even have to wake up early for you. I just had to stay up a little later. But yes,
Perfect.
We are here in Guangzhou, China. It's around dinner time, exactly. And of course, trade wars topic this year like it was last year because it encompasses those topics you just mentioned, 5G, artificial intelligence. So today really kicked off with an optimistic note. We heard from PIMCO's managing director and vice chairman John Studinsky. He said that we could actually see a phase 1 deal by Christmas.
There are obviously issues remaining about agricultural purchase targets, forced technology, and broader enforcement issues. But I think the view would be to try to resolve something no later than, of course, we have American Thanksgiving coming up in the last Thursday of November, but to try to resolve something by the beginning of December and sign it before Christmas.
Brian, we also heard from 2 of the biggest unicorns in the world, both Chinese startups, both in IPO limbo. Now, Ant Financial, we heard from that fintech giant pulling its listing last year. I asked its head of its international business if when that was they were going to pick up on those plans again. He said that there wasn't a timetable, but he said there's not a lot holding them back. However, a changing payments landscape may be a major reason. Alipay's lead in Chinese mobile payments, that's being challenged by another giant, Tencent's WePay. We also heard from Chinese ride-sharing startup Didi Chuxing this afternoon. The company's CTO of ride-sharing said that data would lead them to profitability. But of course, the public market has not been kind to its peers, Uber and Lyft. So that company, that unicorn, in IPO limbo as well. Finally, Brian, we did hear from Airbnb's China president. And of course, they are getting ready for a listing next year. And Brian, while others have really failed and tried and failed in China, notably Uber. Airbnb is committed to the market and it's making further investments here. So it will be very interesting. I know you were running sound from Brian Chesky earlier. Be interesting what that IPO prospectus says next year when we get it about its China business, where a lot of companies have burned a lot of money here.
Well, they certainly have, and having just finished Mike Isaac's excellent book on Uber, super pumped. We could go into the China story, but I digress. Let's talk about something else. News that you broke overnight, which is that despite all this unrest in Hong Kong, the financial markets there not being affected, really, Deirdre, according to Alibaba. What has happened with Alibaba's, I guess, secondary IPO that is a little bit surprising?
That's right. Well, it was oversubscribed. Demand was strong, which shouldn't come as a huge surprise, but it was so strong that Alibaba is closing the books half a day earlier. Now, we do get pricing after the market closes, Tuesday, your time. But what this really tells us is that this could turn out to be a real vote of confidence for the Hong Kong market at a time when turmoil is getting a lot of the attention. Of course, Alibaba is still a very well-known company in the Chinese market. To Chinese investors, it was actually listed in Hong Kong for years before it was taken off. So, guys, that's happening this week, and they're not doing it the typical way, but it has to be carefully orchestrated. We're watching that closely. It's only 50 miles away from us here.
Yeah,
right?
It's very close. And by the way, I'm realizing, as I'm going to say it again, just to make myself feel better, East Tech West. If it was like Wheel of Fortune and it was a final clue, name a big conference, invitation only with Deirdre Bosa in China, we'd only need like 5 letters. If we just bought 2 vowels, it's the
right.
East
That's a good point.
Tech West. I'm just going to keep saying it to make myself.
You did it perfectly, Brian.
Thank you. It's 5:20 in the morning here, Deirdre. Deirdre, great stuff. Thank you very much. Talk to you soon. All right. By the way, check out Deirdre's story on Alibaba with our colleague Arjun Karpal, which is on CNBC.com right now. All right, on deck. Just 1 week into its rollout, and your Disney Plus account may have already been hacked. That story ahead. Plus, RBC's Halima Croft live and on set with us. She just got back from the Middle East. What are they saying about the implosion of U.S. oil and gas firms? Are they talking about it at all? We're going to find out, and so will you, with Halima coming up.
Your skin has different needs at night.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
London. There's nothing like coming back to a warm home after a long day at work, especially when you've been stuck in rush hour for what seems like an eternity. Luckily, with Hive Active Heating, you can turn your heating on from wherever you are. And with our Black Friday offer, enjoy 25% off, plus a free Amazon Echo Dot. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply. Offer ends 2nd December.
Satellites, movies, and clouds in focus today. All right, first up, Intelsat. Shares down again right now. Not a lot, but they got crushed yesterday, losing investors more than 40% of their money. This was after the FCC announced that it would auction off part of its C-band spectrum in place of 5G wireless networks. What does that mean? Well, Intelsat and other satellite operators provide C-band service to roughly 120 million U.S. households, and that was seen as a major blow to their business. All right, next up, AMC Entertainment shares look to move higher today. It is on news that the Justice Department is looking to scrap what's called the decades-old Paramount consent decrees. Well, what is that? Well, those were enacted in the 1940s and 50s. You know, I'm going to punch you in the mug. Barring movie studios from owning theaters and other anti-competitive distribution practices. The government now sees those rules as undated. The idea that a movie studio could now buy a theater operator like AMC is the reason the stock is up 3.5%. And finally, ServiceNow. Shares are higher as well. The cloud-based service provider will replace Celgene in the S&P 500 before the start of trading on Thursday. Remember, Bristol-Myers, a name you might hear later on in the show, is in the process of finalizing its deal to buy Celgene. ServiceNow, by the way, up 3.5% on being added to the world's most indexed index. All right, straight ahead. Lawmakers gearing up for the latest round of public hearings in the impeachment inquiry. We will take you live to D.C. with what investors need to know. Plus, with all the big hedge funds pretty much owning the same 4 or 5 stocks, is most of the risk for your money now on the downside? Your next guest says it is, and we're back right after this.
Sundown vitamins are all non-GMO.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 22nd of November to 5 a.m. on Monday the 25th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
It's nearly here. At Amazon this Christmas, our Black Friday sale has new deals every day. So there'll be more, and more.
Oh, I love it.
The Amazon Black Friday sale, delivering all you need for less. From the 22nd to the 29th of November.
Everybody needs somebody to love. Someone love, someone love, someone love.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search your 2 Christmas deals.
O2 refresh credit by Telefonica UK Limited. Contract eligibility and terms apply.
Could it be lucky 13 for the markets and your money? It might be. Dow futures, they're soaring up 110 points right now as we're looking for the 13th record close for the Dow this year, the 23rd for the S&P 500. Much more in the markets and your money. Worldwide Exchange rolls on right after this.
The S&P 500.
You're stuck indoors, waiting for a delivery.
But you should be at the match with your mates. Get in!
You want to be home when the kids get back from school.
Hey, guys.
But you've got to work late. Again. With Ring Video Doorbell, you can do both. Featuring HD video and two-way talk, you can see, hear and speak to whoever's at your door from wherever you are, all on your phone. Available at ring.com and selected retailers.
Did you get the milk?
I bought brie, fish fingers, and washing up liquid.
You went out for milk.
I won't be long.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Building on record high stock futures, they are soaring triple digits once again. Trade talks remain a focus, but the markets could make more new records today. Investor billionaire Carl Icahn has got a stern message for the SEC. He's not holding back. We'll tell you what Uncle Carl said. And Taylor Swift, unable to shake off her drama with her old record label, is their bad blood. It's putting a big performance in jeopardy. You're watching Worldwide Exchange right here on CNBC.
Are you ready for it? I was a robber. First time that he saw me.
Bad blood, shake off. Listen, I promise you, dear viewer, that we will never, ever, ever do a Taylor Swift pun again. Thanks for being with us here on CNBC and good rainy Tuesday morning. It is November 19th. I'm Brian Sullivan. Thanks for joining us. All right, let's get a check on some of the big headlines that we've got out there this morning that are not in the world of money and business. Philip Mena, save us from the Swifties. Take it away.
Yeah, I'm just getting over that Taylor Swift rendition. Well done, Brian, and good morning. The busiest day yet, and the impeachment inquiry gets underway in just a few hours with 4 witnesses set to testify about President Trump's Ukraine scandal. The first 2 to appear are the vice president's top Russia advisor, Jennifer Williams, and the National Security Council expert on Ukraine, Lieutenant Colonel Alexander Vindman. Both were listening to that pivotal call between President Trump and his Ukrainian counterpart, which is now at the center of the investigation. Bei the panda is flying home to China. He's heading back because of a breeding agreement between China and the United States. Bei was born at Washington's National Zoo back in 2015 and was one of its most popular among visitors. Finally, South Dakota's new campaign to fight drug abuse is turning heads this morning. Their slogan, meth. We're on it. Not surprisingly, Twitter had a field day with this. The campaign, which features billboards and ads of people saying meth, I'm on it, cost the state nearly $500,000 according to a local newspaper. But that price tag also includes the website onmeth.com. The state's governor responded to the criticism, saying, quote, the whole point of this ad campaign is to raise awareness. So I think it's working. And Brian, I tend to agree with her. Here we are talking about it.
We are talking about it. A little bit odd, but yeah, hopefully all that matters is whether it works. Philip Mena, thank you very much. All right.
All right.
So here's how your money and investments look right now as we're about halfway through the 5 a.m. hour. In stock futures, they are looking a lot better than the weather. By the way, I say that because it's cold and rainy again here in the New York area. Dow futures up 113 points right now. Yesterday was our 12th record close of the year for the Dow. Today could be lucky 13. The S&P 500, my friends, doing even better. It is on pace for its 23rd record close of the year. And speaking of the number 23, did you know that the average gain of a stock in the S&P 500 this year is, indeed, 23%? And if that wasn't enough, check this out. This could be the RBI, but it's not. We got something else. 63 stocks in the S&P 500 have popped. They've risen more than 50% this year. 12 record closes, 23 there, and the average gain of an S&P 500 stock, the average is 23%. 63 names are up more than 50% this year. It has looked pretty easy to be a market guru this year, but will it last? We'll talk about that in a few minutes. The bond market, by the way, not a big move. The benchmark 10-year at 1.82%. All right, let's get a look at some of the other top stories that we're following for you on this Tuesday. Apple has announced it will hold another event in the coming weeks, this one focusing on apps. The company says the event on December 2nd here in New York, not Cupertino, will honor its favorite apps and games of the year. I guess these are app awards. Meantime, Uber's chief product officer leaving the company. According to TechCrunch, Manik Gupta announced the move in a note to the company's product team. Gupta told the publication he felt now was a good time to take a break, adding, though, that he is very bullish on Uber's futures stock down about 0.3%, now at $26.50. And the outflow for money manager Ken Fisher's continued to mount over lewd remarks made at a conference last month. According to a new report, Chicago's police pension fund is pulling the roughly $67 million it had invested with Fisher's firm. So far, nearly $4 billion has been divested from the company after it was caught that he made some inappropriate remarks at a conference in California. All right, well, stock futures are higher. Hopes for a trade deal between the U.S. and China are facing some headwinds once again. Speaking exclusively with CNBC yesterday, former White House Chief Economic Advisor Gary Cohn argues that President Trump must follow through with his upcoming tariff threat against China.
I think if there's no deal, he'll go through with them on December 15th. I think he's given himself time. He's got him through the other side of the holiday season. And December 15th is a long time from now in terms of tariff negotiations. There's a lot of other things that have to happen in the United States, including debt ceiling, continuing resolution. I think that he thinks that that's a forcing function, and if he keeps blinking, he loses credibility in the Chinese eyes.
All right, some powerful words there from Gary Cohn. Let's bring in Eunice Yoon. Eunice Yoon joining us now from Beijing. Yesterday, Eunice, of course, breaking news that literally moved markets in the morning. Eunice, I missed you yesterday morning, but good to see you now. Gary Cohn is no longer with the administration, but I guarantee you, and tell me if I'm wrong, that those kinds of words from a guy with that kind of access, or at least previous access, are going to get attention in the halls of power in Beijing, are they not?
Yeah, absolutely. And I think that the Chinese definitely don't want to see a December 15th tariff go into effect. But there is a calculation here, and that is that President Trump, many believe, won't want to see these new tariffs imposed either, especially right before the Christmas holiday, and then also because of the potential negative impact it could have on the U.S. economy. And in fact, today I was speaking to more U.S. suppliers who do business in China, and they were saying that the Christmas sales won't be affected, but definitely their pricing into 2020 will be. And so far, in terms of the impact on Chinese companies, some of their manufacturers have already agreed to absorb some of the tariff, but not all of them. And the ones that aren't agreeing are those that have customers in different countries. So suppliers here believe that they have really no choice but to push some of that cost onto U.S. retailers and hence onto American consumers. But one of the ways I'm being told that the suppliers are trying to be transparent and fair is that the way the contracts are being written is a little bit different this year, and that is that many of them are now including what's being called a tariff charge in that contract, so that if President Trump does impose a tariff, then that you will see that tariff charge. But if he decides not to impose a tariff, then that tariff charge will be lifted. Brian?
Great reporting as always, Eunice. Thank you very much, Eunice Yoon from Beijing. Well, those China trade talks have once again become the primary driver for markets. And there must be some optimism because the markets just keep rising. Joining us now is Dave Mozzie, his managing director and head of products at Direction. I mean, Dave, you heard all the stats. I mean, the Nasdaq's up 28%, the S&P up 23%. There's 63 stocks up more than 50% this year in the S&P 500. Is anybody surprised by the strength of this market, given that, by the way, nothing has gotten done on trade? Zilch.
Well, that's absolutely right. We're entering into kind of an air pocket in the market from a data perspective, where we get out of earnings season here in this week with the retailers, and really trade's going to be the dominant headline. But to your point, we haven't really had any progress. This phase one deal was supposed to be done by now. Now, with that being said, markets continue to make new highs. Really, any day that seems to end in a Y, at least for the S&P 500, we have a new all-time high. But we're getting to the point where we have this sort of fear of missing out behavior. This FOMO is taking over. And that is actually
if you could rearrange the letters of FOMO to something else, and I was thinking about it the other day, and I'm realizing I can't say that, but I think our viewers
know where you're going with
sort
that.
of can figure it out, because I just wonder, is this market starting in some ways to not make sense? When all the bears capitulate, when everybody just says, you know what, literally, I give up, I'm going to start buying stocks. That's what feels like what's going on right now. Everybody's piling into the same 5 or 6 names, as evidenced by that Goldman Sachs data on hedge funds that we just talked about twice this morning. Is there any risk here?
Well, we actually think the bias is the market continues to go higher. Bull markets don't just end of old age, but we are getting to the point where valuations, if we look at forward price to earnings or forward price to sales, are getting to the point where we've seen the markets actually begin to tail off a bit. Now, with that being said, in our trading clients with our leverage and inverse ETFs, we're seeing something interesting. So for the prior few months, and especially in the last 3 weeks, even as the market was beginning to make all-time highs, more money was going into our bear funds. So that gives you kind of inverse exposure. You're kind of betting against the market.
As of when? How long has this thing started to happen?
Well, within the last week, that switched. So prior to that, in the last month, people were actually betting against the market.
They've given up.
But now they've actually piled back in. So they've gone.
Well, probably because if they were 3 times negative, if they were doing one of these 3 times bear funds, you guys, I mean, they got crushed.
You likely would have.
They just said, you know what, I'm taking my losses, licking my wounds, and going home.
But see, you make a good point. That's likely what was actually be the driver behind that. However, when you see that giving up in behavior, when people aren't looking to actually begin to play the mean reversion, that gives us a bit of pause that actually, when people are beginning to pile into either the same names, especially in this case, we're seeing it in all of our cyclical names, aerospace and defense, regional banks, transportation stocks, oil and gas. It's really the most highest beta bullish areas of markets that actually people are looking for those amplified exposures.
That's really interesting stuff, that people were betting against the market. They've gotten whacked. Now what Dave is saying, by the way, is that people are starting to come into these long-only funds, like they've basically given up, like I'm done shorting effectively. I'm going to go long. And by the way, it's not just here. I mean, we pointed out at the top of the show, the German DAX, their Dow, is up 13% in 90 days. The French market, up 10% in 90 days. It's almost like the market is, I'm trying to find a word that's appropriate at 5:41 in the morning on national television, but it's moving higher without a lot of meat behind it.
Well, people came into earnings season expecting the worst, right? But as we usually see with earnings, companies beat, and they've been beating on a decent basis. So it's been enough. But to your point, we're getting to the point where if we don't actually see some action on the trade deal, I think we're going to see investor sentiment begin to wane a bit. Yeah. With that being said, who's always supportive? We had a meeting at the White House yesterday with Treasury Secretary and Chairman Powell. The Fed has been the backstop. We've seen it again and again in this recovery, and it's not just, of course, the Fed. It's the ECB, it's the BOJ, and really central banks around the world went from this time last year raising rates to now the bias toward tightening and expanding the balance sheet.
Yeah, I feel like they're the subway pushers in Tokyo. The central banks are kind of, shoving people on. They do that in Tokyo to get you on the subway.
Yeah, you got to get on.
And I feel like the central banks are doing that. Really interesting data, people capitulating, going long. Dave, great stuff.
That's right.
Thank you very much. All right. Coming up, lawmakers want more answers from Google about a data deal with a hospital network. Plus, you got a Disney Plus account? You probably do. Well, already, somebody else may be using it without your okay. That story ahead. Stick around.
Sundown vitamins are all non-GMO.
Freezing Tuesday mornings like this are cruel. You cough,
You splutter, so does your car. Its battery, dead, killed by an icy claw. Will anyone stand up to winter? Yes, you, come to Halfords. We fit new batteries on the spot from just £15. And we're open late 7 days a week. See halfords.com for opening hours. Here in Wandsworth. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
For the independent bookseller who found you that first edition.
For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
At Lidl, we're big on those little reasons to be jolly. Like our delicious Favorina all-butter mini Stollen bites for just $1.99. And 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
All right, welcome back. Oil prices down a bit today and kind of just stuck in that mid $50 range in the United States. Traders keeping track or trying to keep track of the trade talks and of U.S. inventories as well. WTI and Brent have stalled in recent days after rising in the first half of November on some signs of progress toward a trade deal, but the issue is not supply, it's probably demand or a combination of both. Lee McCroft, Global Head of Commodity Strategy at RBC Capital Markets, CNBC contributor, just back from a couple days at ADIPEC, which is one of the biggest, if not the biggest, oil and gas conferences in the world in Abu Dhabi. Great to have you here.
Thank you for having me.
Okay, I know I saw you, I followed you on the gram, so I saw what was going on, but is anybody there talking about what's happening here? The Permian Basin companies, stocks are down 40, 50, 60, 70%. Debt loads massive. Is anybody talking about an imminent demise of the U.S. oil and gas boom?
I mean, they're not talking about a demise of the oil and gas boom. What they're talking about is the slowing story. And I think that is influencing OPEC decision making. A year ago at ADIPEC, it was full panic. Trump had issued those waivers for importers of Iranian oil. He was basically saying, get prices lower, put more barrels on the market. Prices were tanking. This time, the mood was very calm, and they were pointing to slowing shale growth as one key indicator for why they may not need to be as aggressive at the next OPEC meeting. Roll over the cuts, but maybe don't go deeper, because maybe the U.S. story is not going to be as formidable as it was this year.
You know, because that's interesting if OPEC's looking here, because I was just thinking, we're going to the OPEC meeting in a couple of weeks, I was just thinking that OPEC, which has kind of always been a four-letter word in America, I mean, OPEC's been viewed as kind of a negative, in the United States for about 40 years, maybe the only entity that can save the U.S. oil and gas markets, because if prices don't go up, we're going to have waves of bankruptcies. Hard stop.
I mean, I think this is an important story. I mean, the White House has been very critical of OPEC, but yet OPEC has put in the floor that has helped U.S. producers. And I always get calls from producer clients going into the OPEC meetings. They're all watching what OPEC is going to do. And right now, I think OPEC's looking at the situation saying, you know what? Roll over the 1.2, don't go deeper, and let's see how this whole thing plays out. Maybe we've done enough for now. I mean, but there is stories outside of the U.S. We've got Norway coming on. You've got Guyana coming on. So you have other non-OPEC supplies hitting the market. So the question is it simply enough to do 1.2? Are they being too complacent themselves?
Okay, so arguably, and if I'm wrong, let me know, arguably the swing producer in OPEC the last few years has not been Saudi, it's been Iraq. Iraq's boom, probably nearly 5 million barrels a day. We don't really know. Well, they're riding there. People are ticked off at the government.
They're riding there. They're riding in Iran. I mean,
and so do you think that what we're seeing in Iraq and start there first, will affect oil output?
Well, what we're seeing right now is we're seeing major protests that are closing one of the biggest ports that they use for bringing in supplies for the oil sector, essential food. They haven't closed fields yet, but these are massive protests, thousands of demonstrators, 300 people have been killed. And the question is, are we potentially going to see something like a big oil worker strike? Like that would be something that would be catastrophic.
Because they know where the bread is buttered. Iraq's printing money with oil, but the people aren't getting it.
Well, this has been, I argue, we've almost had a second Arab Spring this year. Government in Algeria has fallen. Sudan has fallen. Lebanon has fallen. And now in Iraq, there's a question of whether the prime minister can survive. And people are saying, look, we're producing close to 5 million barrels of oil, but we don't have clean water. We don't have electricity. Where does this money go? And you're starting to see protests in Iran as well, breaking out over the weekend when they raised petroleum prices. People in Iran, 100 cities are saying, why can't we have cheaper energy? Where is this oil money going? Now,
where is it? Well, where is it?
Subject to sanctions, so it's an easier case the Iranians can make. But in the case of Iraq, you look at this production rising, you look at the revenue they've gained, and the question is, ordinary citizens aren't seeing this.
Yeah, and it's funny, though, I think that the U.S. oil producers who have always sort of vilified OPEC may now more than ever need OPEC. They may need OPEC. They may need the cartel's ability to help firm, maybe not raise, but stabilize prices.
Well, I think OPEC believes with a better macro outlook that they can potentially keep prices in this range or a bit higher. But they don't want to give a huge lifeline to shale either.
Well, will I see you in Vienna?
You'll absolutely see me in Vienna.
Halima Croft, thank you very much.
Thank you.
Look forward to it. All right. Let's find out what else you're going to be talking about today besides four-letter cartels. Joining us this morning for the trending stories is Mr. Frank Holland.
Good morning, Brian.
Disney Plus already hacked?
Yeah, you know, it's a lot of hubbub on the internet talking about all this. So Disney Plus subscribers, they may want to consider actually changing their passwords. Multiple reports suggest thousands of Disney Plus accounts were stolen by hackers and then put up for sale on the dark web. Dun, dun, dun. The hijacking happened mere hours after the services launched last Tuesday, also my birthday. A Disney spokesperson told CNBC the company takes the privacy and security of users' data very seriously, adding there's no indication of a security breach on Disney Plus. One cybersecurity expert says users who use the same passwords on multiple sites may have been especially vulnerable to hacking. So it's certainly an issue. I know about you. I use the same password on a lot of those secondary
I logged into my Spotify account a couple of months ago. I had like 3 people logged in. I didn't know who they were. I mean, literally, I'm like, oh, change password, delete, whatever, blah.
Hard to keep track of all.
This is a cool story.
Very cool.
I like this car.
It's a beautiful car.
Yep.
But some mixed reviews on the outside of it.
I would like to drive it.
We're going to start with the actual news of it. Motor Trend says the Chevrolet Corvette Stingray is the 2020 car of the year, despite the car not being in full production. The magazine calls the car, which initially had a December release date, a game changer and says it'll actually bring people into dealerships. Some of the car's highlights include a lack of road noise, superior ride quality, and a comfortable, supportive, and sleek interior. But the Corvette's exterior did get some mixed reviews. The car is expected to be released early next year. Corvette sales are down for the first half of the year, so if Motor Trend's right, those will pick up because people will come into the
Corvette loyalists hate it because it's a mid-engine car. Corvette's always been a giant big block V8 right in the front of that car. I get it. It's got a distinctive look. You're getting in that car a Ferrari for less than half the price. Effectively, the look and performance of it. I know it's not a Ferrari. Don't come at me, Ferrari fans. But you get my point.
Don't at me, bro.
I think listen, GM, if you need somebody that 30-year experienced race car driver to shake that baby down, I might know a guy.
Are you soliciting right now?
No. It's Frank Holland. Thank you.
Thanks a lot, man.
All right. Take care, man. On deck. The holiday shopping season. Are you already finished? Have you not yet started? Who's going to win? There's so much to know. We're going to dive in with Jessica Ramirez. Plus, investor Carl Icahn, he's going after the SEC. Tough words from Uncle Carl next.
Sundown vitamins are all non-GMO, made with naturally sourced colors and flavors, and are gluten and dairy free. They're all clean all the time. Even if sometimes we're not. Sundown vitamins, all clean all the time.
Imagine having whiter teeth in just 4 days. Imagine strengthening enamel while safely removing stains every day. Act Whitening Mouthwash. For a brighter, whiter smile, stop imagining. Start acting.
Hi, I'm Joan London with A Place for Mom. Over the years, we've helped thousands of families find senior care, and today's senior living communities have never been better. With amazing amenities like movie theaters, exercise rooms and swimming pools, public cafes, bars and bistros, even pet care services. And nobody understands your options like the advisors at A Place for Mom. These are local expert advisors that will partner with you to find the perfect place and determine the right level of care, whether that's just a helping hand or full-time memory care. Best of all, it's a free service. Call today. A Place for Mom. You know your family, we know senior living. Together, we'll make the right choice.
Call A Place for Mom right now to get our free ebook on financing senior care, as well as a free referral for senior living communities in your area. Call 1-800-211-0451. That's 1-800-211-0451.